Good morning. You can adjust your mics or your speakers. I'm adjusting my mic. Happy July 31st to you, last day of July. We're going to be streaming stocks, options, futures trading today. Watching technical analysis, watching the SPY, watching Tupperware, GME, barbecue, fish, whatever comes our way. Whatever you guys mention, we'll take a look at it. Sub up, like up, comment down. Happy money sticks around. You can follow us on Twitter, I think. I don't know what to call it. I'm fine with just calling it Twitter for now. We're at Happy Money YT on there. And you can get on our Discord server if you're not already. Free to join. It is in the description. And I will pin it in the comments as well. Thank you guys for your support and joining this morning. Got about 10 minutes to the bell. Hope you guys had a good weekend. Hope you're ready for a Happy Money Monday. Morning, Mo Lava. Well done, sir. You've become the first commenter once more. We'll keep an eye on barbecue. It's you understand it's up pre-market. Doesn't mean a whole lot to me. Being up pre-market 7%. We'll see. It's at 31. Yeah. That 30-cent level's what I want to see it hold. Oh, kind of interesting, kind of weird why it's trading up this high without any reason. And that's just retail sentiment holding it up. That's not what it seems like. So yeah, SPY with a little gap up this morning. GME with a little gap up as well. Nothing crazy. Tupperware is up, of course. 6.5. Let's check. Oh yeah, I got short on Chipotle. Chipotle. Island Boys. Let's see if this one works out. Up 0.5%. Dish is up 0.7. Funko's flat. Fisker's up 1. Kobe's up 2%. Lucid. Neg doing. Neg. Up 3%. Okay. Back to that 1.4 level. Resistance. Resistance. Rad's up 1.25. Got Rivian's flat. Teladoc's up 1.25. You want to be getting some more exposure on Teladoc. I believe that's on my list. Jim's up 0.5. Like Open Doors up 4% pre-market. Morning, David. Morning, Guts. Yeah, awesome weekend. A lot of fun. Hope you had a good one as well, Guts. Last time you're changing your name? Promise. Formerly Bruce B, though, right? Or no? 12 pre-market likes on the board. Thank you, guys. Got about 8 minutes to go. Minutes to go before the bell. Let's see. Cost is up 4%. What's all that about getting delisted? Zim. Did I close out of Zim? Did. Need to open back up some Zim. Okay, I'm gonna check my orders from last week that are still open. For Zim and one for Teladoc. I'll leave those for now. Teladoc's up 1. I closed out of some of my neg for a loss, unfortunately. Alright, and barbecue's gapping up above 30 cents. Have a little pump in the morning. Be 32 cents. Be patient. I think I might just want to dip by on some bad docket. I'm gonna try to be patient. I don't know. Yeah, I've not gotten any more bullish with more stuff that's come out. But I guess theoretically I couldn't without legitimate something coming out, and then the price probably won't be here at that point. So. No more changing. ZB. All right. Morning, Maui. Aloha. Happy Money Monday to you. You had a good weekend, sir. Let's see. Barbecue's borrow fee. It's coming down some more. Not a great sign, actually. Doesn't look like it's just making consolidating before it keeps coming up. But it's actually hit a peak and come down. At 141 now. And that is today. So these are updated shares. About 2.0. Patty Wu. Yeah, she answered it and said she was talking about Dream on Me. She shared the article with Dream on Me being the acquirer. But even if she wasn't, there was some. If it was Ryan Cohen or Icon, or there was some crazy tin, but there's not. She, like I said on Discord, all the tin could be true, and we could still have zero value as shareholders. Like it's good and all, it's cool to just watch, but it means nothing to us until we know that there's value for us. Not for people buying it, not for creditors and debitors, for shareholders. Because seemingly we're holding shares in something that has no value. There's nothing there anymore. So, I don't know. Morning, Owl. Kelly's Island Maui Sam doesn't drink, but he did. A couple of drinks over the weekend isn't too bad. Keep it in moderation. It'd be good. Thanks, guys, for your pre-market likes. 30 seconds to the bell. We're at 14 likes on the day. Not too bad. supply selling off into open. Like barbecue is up. Pre-market. Oh, no. Back down now. Looks like it might open up flat. Down 1.7%. Yeah, I can't hold pre-market all that heavy. SoFi's up 10%. Looky, looky, looky. Why? Why SoFi? Do you have earnings? Believe so. Pre-market earnings. Nicola's up 7. They also have earnings. Dim with a sell-off. Teladoc up 1.25. Barbecue doesn't even look like it's trading. I don't think they're trolling, and I don't suspect they're giving hope. It's just a bunch of people reading into it, and you seek and you will find. Like, very simply, if you're looking for it, you can find it. SoFi's ripping there. If they were giving hints, they could very well be in heavy legal trouble. And if they were trolling, that would be market manipulation. So yeah, I mean, either it's true, but it's not from them trying to make it seem that way, I would assume. Yeah, SoFi's ripping there, 18%. Space is up. Barbecue 29.45. He's flat. The dish is 0.7. Good morning, Ronald. And Tupperware's taken off as well. 11%. The pre-market highs. SoFi now 20. Oof. No lets in the stock market, Ronald. There you go. Barbecue's green. 136. Morning, Tasty. Egg is flat. Teladoc's up 1.5 now. Barbecue. Barcoding around. Close to open, well, close to flat rather. SoFi still 15%. Zips pick up 5. IFBD. Fingers up 5. Ubo, we've got 5% on. Buys kind of coming down a little bit. $0.29, $29.90 again on barbecue. Palantir 6%. Space is up 6. Nice little bounce on that trend line for Space. Guess they had earnings. A lot of these plays I've kind of just sat on the sidelines for since they had earnings coming up. So once the earnings are done, I'll be a little more comfortable. Plug power up 6. Haven't reported yet. Morning cruising. Last day under 30 cents. Maybe. 4 hops. Or the last day 29 cents. Above 29 cents. Corsair is up. Must have had earnings. Corsair's never up. Excuse me. Cost, yeah, I hope cost catches fire. % this morning. Took a fatty loss on BBIG. Sitting down 27% again. The Q now. It's down 27%. Yikes. What about cause? Cameron. Can't be joking like that. Not after BBIG. Tune? We've looked at Tune before. Reverse split squeezer maybe, huh? The heck? Oh, this was Genius Brands. Cheeky new ticker. Leaving all the baggage of Genius Brands behind. GME is down. I want to get some, or it's up a little bit. I guess I want to get some puts though. Just move so slow now. Rallying up a bit. Choppy morning. Barbecue did hit 30 cents, it looks like. You see that on there. A couple of trades went through at 30 cents. SoFi, 18. Need to really hold above this level. If it does. There's a new high on the day, I think, on SPY. No, not quite. Excuse me. There's yesterday or Friday's high. Put a little pre-market high in there. Hmm. %, on SoFi. Or kind of came down a little bit, still up almost 4%. Got Barnes and Noble up 16. No idea the gap up on that. Cost 3.7. Dish is pretty flat. Oh, Fubo hasn't even had earnings yet. Fubo's up 7.3. Nikola rally, almost 10%. Same with InfoBirds. Peloton's got 5.5%. Barbecue now red 1.3. New high of the day there. See if we get some resistance at the pre-market high. Fluxo. What is Fluxo? Fluxo Technologies. The China? No. No reason for the gap up. The FLI still rallying a bit. Yeah. Chart looks pretty nice too. 5% on that one. Green candle on SPY. Boy. Boy. There's a retest of the high, the pre-market high. Could even take a little cheeky short there. New high there on Dish, up 1.6. Safe's up 2.5. Charge points up 4.25. Blinks up 2.25. To see these kind of turning around, maybe. Excuse me. Barbecue still flat. Teledoc's up 2.5 now. I still have some of these calls. Teledoc. Trying to get some more. That looks really nice. Probably my favorite looking. Right, meow. Oh, MNK waking up. This thing could get wild. 30%. I don't have day trades to use on there. Yeah, if you want to get some day trade in, MNK might be a good one. Things definitely been volatile. Up, we're almost 10% now. Teledoc retraced to 38.2% level. Fubo almost 10%. $3 on Fubo. Tupperware. $3.39. Dish holding out 1.7. Boss is up 3.3. Roku. Spy kind of wicking up there. Trade guard. I have no idea, Maui. Never heard of him. Morning, Macaroon. Macaron. Boltle's up 1.25. Going the wrong way. Ooh, okay. %on costs. IFBD's at 11%. I kind of bull flagging up here. Workhorse is up 11%. GME's up 1%. We got 3% on BlackBerry. BBBYQ's down 40% now. I'm glad I got out. That is crazy. Coin's up 2.8. Datadog up 2.8. Barbecue's down 2. We got a firm ripping 11%. Got 2.5% there on Dish now. Let's buy 460 at 16. 460 calls? Dailies? I'm assuming. We'll see, Cameron. Down 2.8 or 2.5. I'll sell my last shares if we break this support. And if we don't break through here, as we haven't yet, got a nice big head and shoulders here. Then breaking through the support would be not quite the neckline, depending on when it happens, but that's the OTC support that we've been holding. Yeah, this is a little funky this morning. A little too much funk. Huh. % on Nicola. I took a short there, micro. SPY getting a little flushy flush. A little toilet flush on the SPY. Fi 9%. Bye. Faraday future. What do I like? Teledoc. What do we like? T-Doc. When do we want it? Tomorrow. Yeah, SPY's flushing down a bit there. So on Friday we had kind of an inverse cup here. Then the handle, and then we kind of just chopped end of day. So today with the gap up, I don't know, it could still be completing that handle, or you could look at it as a double top here. Zim is down 1.7. I like Zim's chart also. New low there on SPY. I have to up my price on my calls on Teledoc. I could just leave it and wait. Maybe I'll get filled. Starts to break out, then maybe take it. It's maybe happening right now. $28.90 on barbecue. $4.56 puts also, huh? Right before opening bell. AMC's ripping on that. Bankruptcy fears. Let's see what happened with barbecue. Killing it on the OTC. AGBA? What is this? Maybe not bad. Pretty early on it. If it happens. Um, do have some volume on that green candle yesterday, which is good. Needs to break some resistance here, though. You've got some horizontal resistance at $1.40. You see it break that also. I mean, you could play the move up to, I don't know. I'd probably wait a little longer on it. More confirmation. What are they saying? Inverted hammer. Yeah. Little premature, I believe. MNK 25%. Barbecue down 4.6. All right, let's see it. Here we go. Who is Double A working for? You tell that turd who's boss. NRGV ripping 11.5%. Excuse me. Might break out here. Earnings run up. Still engaged. Palantir up almost 10. TTOO up 8.25. Okay, I close that short for now. Little bouncer and barbecue. Bounce off of that prior support. Cost 5.25. Oh, baby. Dish 2.7. Sorry guys, gonna be coughing some today. Yeah, I think it's just like this other COVID. Not bad. Just seems like it because it's weird. It's lingering. CPU is right for a squeeze. Like a squeeze into earnings. I don't like squeezes before earnings. It did just break out of that resistance. Is yours similar, Guts? This is like the same thing my kids had. I think they all had this little cough, COVID cough, or whatever it is. Theirs got bad though, but it never really affected them. They didn't, you know, they just coughed at night. During the day some too, but no other symptoms really, just to cough. Tons of, you know, tons of energy. Everything was normal. Kind of the same thing for me. Cough never got as bad though. Now I'm just kind of coughing it out. Guess my energy's down a little bit. Ooh, almost 11%. GME's up 1.25 now. Black seed oil. You ingest black seed oil? I'll like put that on like topical. Right, G3. Yeah, like you. I feel like there's dust in my throat. But now it's turned into like phlegm. You can hear it clearing out, which is good. It's 12% on Fubo. Plug power 8.4. Teledoc 3.3. I don't want to wait. Know what I mean? The chart is just way too nice. Barbecue down 2. Choose everything but death. Nice cop, Cameron. I'm gonna go see it. I was gonna go the closest theater that has a 70mm film, 70 by 15 or whatever, is like 3 hours, 3.5 hours. I was gonna go to that, but I don't know. Practically, I don't think I can do it. But there's a closer IMAX, like a proper IMAX. I think I don't know what the projectors are. I can't get a hold of anybody. But I'm assuming they're digital. But they still have the huge. The screen actually might even be bigger. It's like a museum type. Barbecue down 4.6. So hopefully it's film projectors, but I'm assuming it's digital. But I don't know. This place is pretty old. But I've been seeing the reports of Oppenheimer like destroying projectors. Around the country. You high there on Teledoc? Come on. Muslim Bubba? No, I'm not Muslim. Mo. Oh, Bubba. I thought you were calling me Bubba. Yeah, I don't know if I've ever ingested it or not. My wife's probably put it in something I've had. I didn't realize. Almost 4% there on Teledoc. These contracts are kind of slipping away from me. I don't like the morning contract purchase. I guess good news is I already have one. Smile Direct's up 12.5. Move up almost 13 now. He's rallying. Little bull flag on a firm. Plug making new highs there. 8.5%. Ah, there's MNK. Another 10% on that. 33% now. For $1.49, $1.50 resistance. $1.60 after that. Barbecue down 4.6. Dish, little rip. 3.25 now. Teladoc, 4%. Well, I'm glad I bought back in on this dip at least. Just hoping to get more discount. See if it settles down here in a little bit. I'll grab some more. Zoom's up 1%. Let's see, SPY climbed back up to VWAP. I was a little slow on closing my short, but wasn't sure if it was done. Oh snap. Toss is up 5.25. I think a break on VWAP and I'd like to go back along on SPY. Starting to break a little bit. Let's see. I see Tupperware 12%. Another good one to day trade. I'm up on the highs there on top. %13 on top. All direct almost 13%. Dish 3.3. Cost 5.25. It lays up 1.7. Guarantee is ripping a bit, up 9.5. See what Iron T is looking like. Might be a good long here pretty soon. Have an RSI divergence. Good start. Resistance it needs to break right here. That'd be a pretty big resistance actually. Also having a bigger RSI divergence with back here. Perhaps Iron T might be flipping this trend around. Oh, I see this even on the weekly. Yeah, you can see the RSI divergence on the weekly. And I'm liking it. They have options? They do have options. Almost just want the shares and then sell some options. Pretty far out of the money. $1. So you're saying there's a chance. Didn't sell me those. $4.5 on Teladoc. See, move back to VWAP. Maybe I could get filled. $32% on MNK. Barbecue still hanging out, just down 3. Smell direct up 11. Haven't I ever forced him to use it? I mean, I feel like there's always IMAXs going around, like at the museums and stuff, where there's real IMAXs, IMAX screens. I think it's just mostly on digital projectors and so this 70mm projector that they're using, if they have it, and then combine that with just the length of the movie. Just wondering if they're like overheating or something. Or yeah, maybe a combination of that and like not ever using those. Top testing the highs there, just broke out 20%. I think the digital projectors are fine. There's a new high on top, I think. Yep. New high on top where? Rip rally. Crazy. Thing had hardly any pullback from this last time I was here, which doesn't make me super bullish actually on this breakout. But there it goes anyways. That's actually a big resistance to break. Options are crazy. Gotta sell these. See if it uses that as support now. Breakout level. Oh. ACHR. Is that an eVTOL? Sure. A big move. They have good news. $142 million boost. Archer Air Aviation bags U.S. Air Force contracts worth $142 million. Nice. Insider sell vindicated after 13% drop. Not so nice. See if Tupperware is legit about this breakout. It might have been false. Might have been some stop hunting. Percent on Fubo. GME's up 1.5. IEP doing it's up 1. About your Pac West down 1.25. We shall save Tup from BK. I don't think Tup was really gonna go BK. They were delayed on their filing, but I think that was it. Pull down DFLI. Lots of extra capital we have there. Triples and double downs, and I guess we don't have it in barbecue. Alright, we do have the break on VWAP here on buy. Like it. Oh, Tough Warriors holding up there. It's fighting him. It's a pretty big resistance. That was a support that held for a while. They continue to bounce off of. Wow, months and months. From November to what? February, March? Big resistance to break here. I think it's doing it. Tempted for the long. You could sell the four call. You could spend $370, buy 100 shares, sell the 4 call for August, and get back $110. That ain't bad. So it's like you're buying this for $2.80. I'm moving up a little bit more. That is neat. SoFi hanging out. And that bull flag costs up 5 1/4. Teladoc up 4 1/2. Such an issue with going along on something that's already ran up so much. Fortune says Tupperware warns it could go out of business soon. When was that article? And if this rally continues, they'll have a nice little price for a share offering. Ugh. I stopped out of that long. Oh, didn't feel good. Fly back down to the WAP. Back in shorts. Tough. Just it's maybe consolidating on that breakout. That's good for the longs. Oh, all right. Top just rejected that. Moving back to VWAP. Nicola was 20% on that. Jumia. Yeah. 9.6% on Jumia. It's you. Kind of breaking out there. Pelodox not coming back to VWAP. Waiting for VWAP to come to it. Market's kind of just chopping around here. See if it keeps building a little shoulder here. Under VWAP. No, I'm out. Out. MNK ripping there. 40% now. Things come up 20% since we started looking at it. Broke that high. 156. Next resistance. %. Doc not coming down. MNK retesting that breakout. Just came down a little bit. It's below VWAP. Still up 1%. Egg doing. .7 on neg. Brad's up 1.5. Going to get some leaps on Rad. They're almost the IPO price. This. Split or something? Weird. Weeble's not marking it as one. Like a reverse split. Huh. I think hit $1,000 a share. 99. They did have a reverse split, a 1 for 20. Okay. Rite Aid is considering a Chapter 11 bankruptcy filing to address liability-related involvement in opioids. I think there's a little potential for a move here on Rite Aid, similar to what we're seeing on Tupperware. Teladoc, he's still going. Teladoc, 6%. Broke out of there. Alright, the high is 30.41. Calls are almost in the money. Mullen. Resistance is everywhere on Mullen. Oh, there you go. Mullen's moving 7%. Actually nice. There's my line. My breakout line. Broke it today. Horizontal resistance, 16 cents. That's next. Yeah. I like that. Chart looks nice. Is JH buying more? Yeah, I saw an article about Yale going bankrupt. I don't want some Mullen. A little late on the resistance break there, but $0.14. 14's probably next. And you've got 16. Yeah, I picked up a very small amount of Mullen. Does JH give me a trophy now or something? I should get one. Breaking up now or not doing well. Sure, busy bee. So 22% now. Breaking out of there. Workforce 12%. Cost moving up a little bit, 6.25. Dish up 2. Good call on Mullen. Busy Bee up 9.5. Yeah, first resistance here I'd say is 14 bucks or 14 cents. Then 16. Of course, you've got gaps. Lots of gaps.
The ego on you.
Kitty Daddy, look at you. Thank you, man. I appreciate your membership. Thank you for that, Kitty Daddy. Well done, sir. Not even waiting on Papa Ace. True scholar. You eagled yourself. I didn't even know it could be done. Oh, that's right. They had court today. Cool. Might be a nice little dip buy. Opportunity. You guys are blowing up the media. Thanks, Cameron. Just one guy in
That's
there?
good. You can hear me. Okay.
The trial period is over. I log it. I log it a lot. Alright, thanks, Kitty. Trial period has expired. Means up 1.5 there. A little pullback on Mullen. There's your pullback. Want to know if you should register your shares? Looks like the court just ended something. Maybe it's just starting. Just late. Yeah, man, that's entirely up to you. If you think there's going to be some crazy squeeze and you're concerned about brokerages shutting stuff down, like they did with MMTLP, those that are in that thought they'd be better off if they'd registered, then yeah, you could. Your access to your shares is much more limited. I mean, it's much slower to get in and out of the hassle. And you can't sell cover calls on it, so entirely up to you. Catch the teddy in the rooms. Breakout on Tupperware there, 30%. Oh yeah, that's right. It was already above the breakout. Now it's actually legitimizing it. Could be good long. I probably wouldn't do it unless I was looking to day trade it at this point. Just with how much it's run up. Not something I'd want to hold overnight necessarily without more of a significant pullback. Wait, Cha City. Go tell a doc. Come on down.
news shaping the markets, and for that, we welcome in Jeffrey Cleland, Principal and Chief Economist at Payden & Regal. Good to see you. Good morning to you. Ready
Good morning.
For a busy week ahead, I'm sure. We did see the
Aaron T looks good,
hike
TJ.
rates as expected.
I wish I had money to buy it. Trying to figure out how to get exposure.
That's what we expected. And now, the question becomes what happens in September and so on. Where do you think we stand on that front?
Well, the big thing, Nicole, is if you go back to the start of the year, I think the Bloomberg consensus was pretty pessimistic. Forecasters expected Q1 to be flat and Q2 to be negative in terms of GDP growth. And as you know, instead, we had 2% growth at an annualized rate in Q1. And then last week, we learned that the second quarter was 2.4%. Definitely not a contraction, definitely not a recession. And so to me, that tells me that the economy has pretty good momentum that will carry us into the second half of the year. That's good news, I think, for equities. I think that's good news for the average consumer. It's probably not the best news for the central bank. Their entire goal of hiking 525, 550 basis points in the last 15 months was to slow economic activity, and that hasn't really happened. So I think that keeps the door open for additional rate hikes. Right now, we have another rate hike penciled in November, but as we heard from Chair Powell last week, it could come sooner. The next rate hike could come as early as September.
Right, understood. So there are some who say September and November, or just one or the other. So we'll watch for that. I mean, how worried are you about a recession when we are getting different prints? I mean, we saw inflation easing with that PCE print. Inflation has been coming down. The job market has been very tight. We'll get a jobs report on this Friday coming up. What are you expecting as far as the job market and any sort of signs of recession and how that might change the picture?
Well, it's remarkable. The unemployment rate is almost exactly where it was when the Fed began hiking, 3.6%. Yet core inflation has cooled off, as you note. So that is good news. We're tracking a little bit more towards a soft landing, if you will. So you look at core CPI, for example, it was 6.6% last September. Now it's 4.8. And your core PCE as of Friday for the June data was down to 4.1. So the same level of unemployment and cooler inflation. That's a soft landing. So we're tracking for that. So that's great news. I don't see a recession in the near term, Nicole. Why? Well, okay, we can look Friday's personal income and spending report. Disposable income, real disposable income. So accounting for inflation, that is now turned positive and is at the highest rate of increase in about 2 years. So when real disposable income is picking up, generally a good sign for the consumer. And it tells me the economy is going to continue to grow in the second half of the year.
Right, understood. And even you mentioned the Taylor Swift. Everybody's just talking about everybody's spending. We're going to be doing airlines and the summer travel demand later in the show. Are you surprised to see how resilient the consumer is, even with higher rates for their credit cards? They're doing buy now, pay later. I mean, they may get walloped.
Maybe, this happens every cycle though, so I don't want to make too much of it. For me, the labor market is key. And in the last few weeks, we've seen layoffs move lower. So initial claims from unemployment back down to around 220. They could even push lower this week. You asked earlier about the job market. We're going to get a jobs number on Friday, Nicole. It could bounce back. We had a little bit of a softer reading in June. I think for the July data, it could bounce to closer to 300,000 for the month of July, we think. The unemployment rate could actually tick down. We could see a 3.5% unemployment rate on Friday. And average hourly earnings, we're expecting to come in around 0.4 month to month. So all great readings for the labor market. That means the consumer is employed and the consumer has income growth. And so that will help in terms of spending and in terms of paying bills, even credit card bills. So really look at the labor market. The labor market remains solid. I think that's a key part of the story.
Yeah. Saudi Arabia extended those output cuts into September, and we've seen oil back to that $80 mark, and you wonder what happens with gasoline and people's prices and things like that. Are you watching commodities?
Yeah, here I'm watching the price at the pump here in California pulled in over the weekend to fill up. So it's moved up a little bit here. So we are feeling that. I think that, what that reminds me of, though, Nicole, is that a lot of investors and colleagues, they say to me, inflation is it's on a cool down path. It's going to get back to 2.5% very soon. You see that reflected in the bond market in terms of inflation expectations that are priced in out over the next year, very, very low. So the consensus, and I think the market has inflation cooling off. When you see things like oil prices ticking back up or gasoline prices ticking back up, that just makes me think that this might not be a smooth slowdown in inflation. There can be squiggles. We can have little periods here where inflation picks back up. And the Fed's probably not going to like that. But I think that's something that investors need to keep in mind, that the inflation dragon has not been slayed, not yet. And so, watching commodities is part of that story, certainly.
We have a China story that has been inconsistent. I would say. I think that may be a good way to say it, because there was the China reopening and some sort of celebration, and then there wasn't. And now there's some stimulus happening. And how important is that to our final story here? Where does the China story fit in here at home?
I think it's a big part of global demand. So we are seeing some weaker global data. But I think the U.S. has been and will remain resilient.
Monday,
continue to see some
July 31st, 2023. This is the United States Bankruptcy Court for the District of New Jersey, and we are here in the case of Bed Bath & Beyond, Inc., 23-13359. Oh, I forgot to do that. Good morning, Mr. Fiedler.
Good morning, Your Honor.
And why don't you go ahead and proceed with the calendar or agenda and let me know where things stand. I understand there's been some developments.
That's right. For the record, Ross Fiedler of Kirkland & Ellis on behalf of the debtors. I'm joined here by my co-counsel, David Bass of Cole Schatz. Your Honor, last night we filed an agenda at docket number 1644. As you'll note, all that's going forward today are about 6 consensual lease sales. There was one matter that we had discussed on Friday, I believe it was, that was going to go forward contested today. That is no longer going forward contested. We've withdrawn our objection. We did some further digging after Your Honor's comments into the facts and the law, and don't believe those support our objection. And to save the estate the resources and Your Honor's time during this hearing, we've decided to withdraw our objection.
Okay, well, I'm glad it was, at least digging into it seems to have advanced the ball in one direction or another, and that's what the process is all about. So, okay, so that's withdrawn, and that lease in Utah is no longer on the list of leases being assumed and assigned.
That's right, and we'll coordinate with Landlords Council on, handling the administrative way to get that off the court's calendar. The lease sales, though, that are going forward today, we've identified on a notice we filed last night at docket 1642, Exhibit A. You'll see there's one sale involving 2 locations in Tulsa, Oklahoma. That's to Dick's Sporting Goods. There is another sale involving 3 locations being assigned as part of a broader package to Dream on Me, which you'll recall was the buyer of the Bye Bye Baby IP assets, as well as one sale going to Scandinavian Designs in Bend, Oregon. The debtors, along with the assignees, have been working extensively and in good faith with the landlords to come to a consensual form of order and reconcile and cure costs as well. And we're happy to report we've reached resolution on all of those issues. There were not any other objections, either informally or formally, that were filed. And so we are proceeding on a consensual basis with respect to those lease sales. We have consulted with the advisors on these sales. There was a robust marketing process, as Your Honor heard on Friday and at the Phase 1 lease sale hearing. And we believe these sales will generate substantial proceeds for the estate and are a valid exercise of the debtor's business judgment. If Your Honor has any questions about these sales, I'm happy to answer them, but otherwise I don't believe there are any outstanding issues. So would just ask that Your Honor respectfully approve these sales as a valid exercise of the debtor's business judgment.
Okay, I'll ask whether any anyone in court or on the Zoom hearing wishes to be heard, and counsel is approaching. If you can come up to the podium, sir, thank you.
Good morning, Your Honor. Ian Winters from Claystat Winters, Dureller, Southern and Stevens on behalf of Dream on Me Industries, Inc. And its designee BBBY Acquisition Co. LLC. As Mr. Fiedler reported to the court, there are 2 remaining leases, one for Braintree, Mass. The other one is for Bridgewater, New Jersey. We've been involved in extensive discussions with both landlords or counsel for those landlords. Braintree, Mass is resolved, not an issue. We're finalizing some language with respect to the Bridgewater. We're in agreement on the cure amount. The Bridgewater landlord requested some repairs to the premises, and we are amenable to making those repairs. We're just finalizing the language on the assumption and assignment agreement related to that lease. And I believe counsel for Bridgewater is appearing via video and can speak further to that if he has anything to add. Thank you.
Okay, thank you. Appreciate that, and appreciate the efforts. Ms. Ravielli?
Hear me?
Yes, just fine.
Thank you, Your Honor. For the record, Jennifer Ravelli of Kelly, Dry and Warren on behalf of certain landlords. Today that includes store number 3060 in Braintree, Mass, with the proposed assignment to Dream on Me. I just wanted to note we are still in the final stages of negotiations on a side agreement that would resolve our concerns with adequate assurance. We're very close. We're not fully resolved. I know Dream on Me's counsel is there. I just wanted to confirm that on the record that we are still working those issues out. I do think we'll get there, but we reserve our rights to the extent for some reason we cannot come to a final resolution.
So the agreement has been reached with respect to the adequate protection that's being provided. We're just waiting for the document from counsel that memorializes the agreement that we've reached with respect to the adequate protection that's being provided to them.
Yeah, I believe we sent a copy over and we're kind of going back and forth on the terms of it. So it's not fully resolved. The issue of how we're going to get there is resolved. It's just the documentation.
Yeah.
Okay. All right. Well, I certainly trust you'll continue to work in good faith to get it resolved, and hope that you do. And if you don't, you'll let me know. But it sounds like you're almost there.
Thank you, Your Honor.
Thank you. I don't think, let's see, Mr. Stein? I don't have a...
I don't quite understand the language on that from Dream on Me. Was she referring to
his box is not certain,
them
highlighted, so I'm not sure.
being able to
Mr. Stein?
basically pay for those leases and working with someone to pay for those, or did I misunderstand that completely?
The Enid lease, and I'm willing to let him speak. I just I don't know what the issue is. Your video and your microphone. That's Mr. Rosen.
Can you hear me now?
Yes, Mr. Rosen was trying to stand in for you, but I didn't let it happen.
I appreciate that, Your Honor. And I just, we had some technical glitch. I don't know what it was, but I had signaled my hand up and whatever sent the message in. With respect to Enid too, it's David Stein, Valence Goldman, and Spitzer appearing for that landlord. I had appeared in court on Friday, and we're trying to work through a lease modification that required certain repairs to be made to the premises, and that also requires a direct pay of the cure amount directly to the landlord. There was some ambiguity in some of the discussions regarding going through the estate or whatever. I just wanted it clear. I had suggested in a separate email to counsel to not delay the entry of an order, that we just have a separate order which would make reference to the lease modification so that there was no ambiguity or uncertainty regarding the effect of the modification versus the global order that's been circulated throughout this case. I just don't want there to be any issue if we ever have an enforcement issue later on.
So, Mr. Fiedler, on separate order versus a more global order,
Understood. I had a chance just to speak with David Bass. That's acceptable to us.
that's acceptable to the debtor.
Thank you. The only other issue is that my clients are remote away right now. We have a 1 o'clock call with them. We think we're going to be able to work with the modifications from Dream on Me's counsel. So I just need the benefit of this afternoon to signal that we're in accord, and we can hopefully get the documents signed up today and not to delay this process.
Okay, great. Same comments as to the prior Dream on Me lease, and hopefully you'll be reporting shortly that it's all taken care of.
I appreciate it. Thank you for accommodating my appearance.
No problem at all, Mr. Stein.
Thank you.
Thank you. All right, so it doesn't appear that there's anyone else that wishes to be heard with respect to this application as to these 6 leases. And as on Friday, there's been extensive marketing by experienced, very competent, beyond competent professionals that got us to this point, and then further negotiations to address the outstanding issues between the parties. So this again is a valid exercise of the debtor's business judgment with plenty of notice, and will be approved by the court.
Thank you, Your Honor. So I think that does it for today's agenda. We do have a hearing tomorrow where we'll be seeking conditional approval of our disclosure statement.
All right.
The objection deadline is in about an hour, I believe. We have
Right.
not received any filed objections, though we've been working with parties to accommodate the requests. We will be filing a revised disclosure statement and plan later today, which will reflect minor changes, but I don't believe tomorrow's hearing will last long given the consensual nature of the relief that we're requesting in the scheduling motion, but happy to answer any questions Your Honor has about that process.
No, and of course, you're all very experienced in this, and disclosure type issues, which I think is really the focus of tomorrow's hearing, I think typically can be addressed by just disclosing that, as I'm sure is disclosing the issue, so that I'm sure that's what's being done, and I appreciate that. And it looks like Ms. Raviel is back on. I'm not sure on what issue, but she's back on.
Good morning, Your Honor. Jennifer Ravelli of Kelly Dry again, for the record. Your Honor, I'm not commenting on the disclosure statement. This actually relates to the lease assignments, but not the resolved lease assignments that were on Exhibit A. There was a section of the notice that had leases on Exhibit B that had not been resolved.
Right.
I just wanted to know, one of our leases, I believe, has been inadvertently left off that list, and I did just want to confirm on the record that lease is going to be adjourned to the August hearing. It's a lease that I mentioned at the hearing on Friday for store number 3131 Pavilion at Kings Grant in Concord, North Carolina. The proposed assignment is to Barnes & Noble. We filed an objection at docket number 1330. As I mentioned, it was not listed on today's agenda. And I just wanted to confirm on the record that will be adjourned to the August hearing that has not yet been scheduled.
Mr. Bass?
Good morning, Your Honor. For
Morning.
David Bass, Cole Schatz, PC, for the debtors, for the record. I wasn't aware there was anything other than a cure objection to that, which we've resolved, but we won't move forward without trying to consensually resolve the form of order with counsel. I know they had commented on the form of order, and I thought we had agreement, assuming that Barnes & Noble had acknowledged those changes, but we're not going to move forward today without that consent. If they think there's a need for a hearing, it's sort of news to me, but perhaps Ms. Ravielli can indicate what the issue is.
Yeah. Ms. Ravielli?
Yes, the proposed attorney has requested a side agreement that would modify the terms of the lease, and our clients have not reached an agreement on what that deal would look like, if any. So in addition to any form of order that we'd have to come to a final agreement on, we'd have to come to a final agreement on any modifications to the lease.
We'll carry it to the August date, Your Honor.
Okay, so there's an acknowledgement, Mr. Aviali, that it effectively not on exhibit, it's on exhibit B effectively and not on exhibit A or any other indication that it's been completely consensually resolved at this point.
Thank you, Your Honor.
Thank you.
I believe that's it, Your Honor, unless you have any other questions. That's it for today.
I only thought, and maybe you're not ready yet, I only thought we were going to talk about hearing dates for the ones that remain open as to the tenant mix type issues, but maybe you don't have that completely done yet.
That's right, Your Honor. We don't have a hearing date nailed down yet, but it will be that third or fourth full week of August, and we'll have a schedule in between to deal with briefing and any depositions that need to be had.
Great. Great.
And we'll get back to you on that once we've come to ground.
All right, and then, yeah, I mean, I just thought we were going to talk about that today, but if it's not ready, you're not ready. So then I do have an appearance from Mr. Nielsen on the Telegraph matter, but maybe he doesn't, you know, I think he came from Utah, so I wanted to acknowledge that I knew you were here, and whether you want to say anything or not, it's totally fine with me, but okay.
No need to waste the time.
No waste of time. It's just, you know, it's courtesy. That's all.
Thank you, Your Honor.
Thank you. All right. Well, I guess that is it then. All right. So great. Thank you very much again for all the efforts, and we will see you again tomorrow, and maybe it'll also be pretty smooth as these have all been. I appreciate it. Thanks very much.
Thank you, Your Honor.
Thank you.
See you tomorrow.
Have a good day.
You too.
Bye-bye. Thank you.
I like that fade out, or that focus out on the judgy wudgy.
Interesting, because you know Qualcomm, you know, you can buy it here. It's up a couple
Spies
bucks right
broke the
now.
VWAP here.
You put a stop.
I was watching barbecue just to see if we get any reactions from what others said. Yeah, neg looked good.
Qualcomm had a nice double bottom. Same deal. Volume starts coming in the equity.
Clothing.
Now, what's intriguing about this
Yeah, it's up
one is
4%.
that you know you got a lot of stories that are pushing out there that, you know, bottom line is that they've always been in the royalty business, the chip business, the royal, you know, and generative AI.
I have calls
is,
I'm
you know, and
holding.
that's where I think this is going, meaning that people are saying, okay, are they into this generative AI? Are they, you know, the chips?
I know it is crazy. They set all up, they do all that stuff, and then it's.
Buying it, though. That's the bottom line. They're buying it.
It seems like they don't get anything done.
Here is that when you're taking a look at it, you know, the bottom line, I think it's going to get up to
Top
this
kept going.
139.
To that next resistance, 49-ish.
You know, that area there,
I guess 47.
high volume high.
Yeah, 47.40.
You know, is not
Oh, it literally hit right on our line.
so the
47.40.
top of that range right now is the 139, which, you know, at the beginning that was, you know, 11. But,
wow.
$9 this morning. Now it's like $7. But that's where it looks like it wants to go. It wants to test that, and we'll see if we can get any juice above that level.
Now let's see if we get a handle.
What do you think here, Ben?
I would agree with
Liechtenstein.
That's a key area right now. The fact that we're still holding below it, though, I think is very bearish. Let's just begin with the more intermediate time frame.
Let's see if SPY's just chopping around, if it holds this bounce here, if it's actually going to come down.
This time frame, this pattern to continue here. We'll look at the bigger picture in just a minute, but you can see around 100s where we balanced out.
It's just chopping around still.
This wider range balance forming around 120.
Apparently.
And also you can see the high conviction vertical breakout here right now. So this is not something I'd necessarily get in front of in terms of this hourly candle, this pattern that's playing out, it'd be a guess, simply put, right? There's no indication that we've rolled over, that we've rejected. We're actually seeking value to the upside in a vertical phase right now. So there's energy, there's conviction associated with that. Question is, will we balance or just V-top and kind of work our way back into the range that we've been in, hanging out around 120? Tom brought to our attention this 139 area he was calling out. I've got it identified more as 140. That's a wide range we spent last year, February, April, May into June before we broke down. The one thing I'm noticing here, though, again, the fact that we've been in the around 120 just doesn't really provide me a lot of bullish sentiment right now. We're kind of just retesting the highs that we saw back in the beginning of this year as we work our way higher. Nothing really indicating rejection as long as we hold below that 140 level.
MNK ripping back up a
Look at
bit.
daily candles. I can show you where we are relative to the 50, the 200-day moving average. We're above them. That is, again, a reflection of some of that more intermediate, more granular time frame bullishness that we're seeing here. But you can also see some of the heavy lifting that's still to be done here. Those highs from earlier this year, I think that's going to be the next big hurdle for the bulls. And then ultimately that 240 levels, we were just looking at that longer term to invalidate the trend that we've seen to the downside. That's a big area that Tom's got his eye on, but still looking like a bearish
50%
setup
on top
here.
or
I see it.
IronNet 17.
There are some bulls
Yeah, IronNet
out
looks
there
good.
who are putting out
I
some
like IronNet
period
as well.
targets that, people seem to be getting optimistic. I don't know. Thank you for all those great charts, Ben. As always, Ben Lichtenstein.
Mullen make it to BWAP.
Final thoughts.
You know,
Yep.
when you take a look at
Good consolidation at BWAP there, Mullen.
See, it broke down, and once it broke inside that range, meaning, you know, the range was 118. I mean, I'm sorry, 108. Once it got back inside that level, it's like, okay, you're going to the next range. That's kind of how these charts are setting up. And that was a long, long base. Okay, so the longer the base, the higher you can actually go. And we'll see what ends up happening, you know, up at that 139 level. You know, bottom line is, you know, if you get sellers, you know, we'll have sellers. But right now, they're buying the equity.
All right. Tom O'Brien, thank you so much. Great to see you. And, of course, our own Ben Lichtenstein.
Have a great one. Have a
for the big three today. Thank you. You too. We have a busy week, so we're excited for that. Coming up, we're going to spotlight current market trends. We'll get some takeaways from earnings season. The Dow's big winning streak that we saw. If we had gone 14 days, it would have gone all the way back to the year 1897. I sort of wish
Wow.
that one day would have been.
Yeah, all right. Morning, Dink. Well, no sell-off on barbecue from it. Still kind of just trading flat. Buy chopping around still. Got Dish up 2%. The PaySafe's up 4 now. Charge points up 2.7. Links up 3. Nicola's up 16.5. AMC's up 6.25. Beyond is up 6.25. A little breakout level here on Beyond. Series up 2%. earnings today? Tomorrow? Highs coming down a little more here. Firm's up 5. Riot's up 1.6. % on workhorse. Top work kind of came down. That's the next resistance. Looks like it rejected. 47.40. See if it trades in this range now. MNK breaking out. Now it's up 35% from when we started looking at it. As let's see, $1.90 next, and that 21. $2.12. SDC breaking out there. New high. Guarantees up there. It's got a really high VWAP. Allure. Party City's up 166%. Lift still kind of melting up. Back West down 1.8. AP up 1.8. Neo really had quite the breakout. Yeah, I saw that post, that dish post on Wall Street Bets. All right, Guts. I might do something I would never do. It's always a possibility. Wayfair kind of breaking out there. A lot of these still have earnings though. Pre-earnings run-ups. Fubo 13.5. Upstart doing 1.3. Coin slowly coming down. Defi's up 18. I think on the earnings. To help out shares instead of calls. I know, man. It's a good. This was a good play. Warm. I mean, they could have gotten calls. Just need more time. They were getting weeklies, which was insane because. I mean, it was all based on a potential future news event. That was on like a Wednesday. They were given it 2 days for it to happen. It's like, what? It's just, I think, complete luck that it came out the next day. That or they had seen the posts and that it's starting to get leaked, and so they released it soon. Which I think could be the case at times. Teladoc moving up there some. Hey CDB. OEV? OEV. Yeah, a lot of the EVs are running today. Chinese and etc. Got that like horizontal one there. 70 cents. Oh. You also might be at a little resistance right here, presently. Could be setting up that head and shoulders. MNK holding 43%. Top of work coming down a bit. SDC breaking out there, 19%. Ubo 13. GME's up 1.5. Yeah, the spreads on GME's options are stupid. There's so many strikes. Yeah, they've forever broken GME's options. Excuse me. Top a little bounce there. MNK coming down to VWAP. Iron T holding up solid above VWAP. Mullen bounced on VWAP. Moss is up 4.25. You're up. Traded calls. Use proceeds to buy shares on GME. No, I think GME's coming down. I'm looking at a short position, but just hate the options. You can see on my beautifully drawn chart there, what could have been a cup and handle, we broke to the downside of. Now it's just like a double top. And we're still in this channel. So, would appear, come back down and retest this. The bottom of it at the very least. And it moves with the market overall. And I would say market looks to be wanting to come down still. A big engulfing candle with volume, not going away.
performing well,
Adobe.
considering some of the other companies out there when it comes to artificial
Oh, doing
intelligence. But in fact, it's
AMC
more
like
of a
that.
stable-based business that has
Lumen,
an immense lock-in when it comes down to their software. And I really
20
put
billion
this
in debt.
company akin to
We
Microsoft. You think about Microsoft, it's a productivity-based software. Adobe is also very much enriched in productivity-based software. And the thing about Adobe, if you look at the last quarter's results,
crazy what
they
revenue they
published
do
them
though.
back on the 15th of June. They're generating about
Losing a
18%
lot too.
EBITDA growth and about 9% sales. So you're seeing 2 times EBITDA to sales growth, and in fact, they're starting to demonstrate monetization of artificial intelligence, which I think is very important considering a lot of AI news is
Market
pushing a
cap
lot of
is
stocks to the upside.
10
But
times some of the other
many
ones
of
I'm
these
looking at with
stocks
twice
outside
the
of companies like
revenue
Adobe may not
and
necessarily
less
find
losses.
monetization of their technologies much like Adobe has.
Right. I mean, you talked about all the different facets from advertising, marketing, and photo. And I mean, it just seems there's so much going on. And you see a new 52-week high for this company. I know it's well off the highs that we saw even just a few years ago. I see 699. But tell me a little bit about where you think this is headed and how you would go about an example trade.
Yeah, so just a moment ago, I mentioned if you look at the stock, interesting enough, a lot of these software service-based companies broke out of trading ranges in late May, early June. And of course, Adobe's done the same thing here, Nicole. So it was around $400 in terms of resistance, and it broke out, and now it's trending quite aggressively upside. So with that said, the upgrades, we also have a company that's very profitable. It's expanding its profit margins as well as top-line sales estimates are growing. We could just play a trend continuation here. So simply put, earlier today, we could have gone out and bought the September 545, 565 call spread. So basically buying the 545 calls and then simultaneously selling the 565. Now earlier today, you could have bought that for about $9 a share or $900 in terms of a debit per contract. So ideally speaking, if you think the stock will continue to trend to the upside, it's moving nicely, it's gapping higher, and we can posit that it would continue this trend to the upside. This is certainly a trend you could consider. So the debit effectively is your total risk. You have a break even around $554, and your max profit is at $565, and that's $11. So you're spending $9 to potentially make $11, but the stock has to hit the 565 to achieve that max profit between now and expiration, third week of September.
All right. Thank you for that. A good look there at a big winner today. Appreciate it. Adobe, our disruptor, with George Sillis.
Okay, Nicole.
Thank you. Coming up next, our 360 round. Want to cover those airlines. We know demand has been there, but now what?
Calls on Fubo.
Wrapping up soon, and what does the future hold for the holidays? And what goes
Depends on your strike and your date and your plan. Certainly you could make money with it, but those 3 things have to be in order first. You're talking like short term, out of the money, probably just gonna lose it. It's up 13.5% today, so if you're wanting to get calls today and you're looking at a good earnings, yeah, I'm not playing around with that at all. You're at a resistance, you've got earnings coming up, it's up 13%. Yeah, I would be selling calls if I had shares. Got 250% IV on the weeklies. After earnings comes out, yeah, then I maybe consider it. I'd probably do spreads or lots of time and close to the money, as again that IV is crazy. But just has to do with your risk management. What's your risk tolerance? You like losing money to IV, crush, and theta decay? You feeling lucky? Teledog breaking out there, 6% now. Never got my fill.
Some of the statistics or things that are jumping out at you on the group.
Well, what I am concerned about is that we know business travel hasn't returned, and we're getting estimates that it won't return to normal levels, pre-COVID 2019 levels, until next year potentially. But then we have all of these pilot shortages and unions really negotiating. So we've just had basically American had a deal, then they renewed
Oh,
down the deal,
there it
United
is.
got a better
There's a
deal,
level I wanted to
then
break.
American got the same deal, then Delta has a deal. We're talking
Wash
about,
through
Nicole,
it.
literally increases in salary for pilots anywhere from 14 to 19% immediate increase, and a phased-in increase over the next 4 years as the deal works out to almost a 34 to 40% wage increase for pilots, because we have such shortages of pilots. And so this is going to further put pressure on consumer prices, which will further, I think, destroy some demand again.
And, I think, Tim, you were talking about, too, about corporate travel and that it just hasn't returned in the way people had hoped. And even some of the airlines have been changing routes because of
MNK moving again. There's 60% on it.
Changed. What does that mean in the long run, Tim?
$1.90 is what you're looking for.
I think the other guest is entirely correct. And now people are starting to talk about how that's going to return in 2024. Who knows when it's going to return? And it may never return to what it used to be. And that's a very, very profitable area for the airlines. I think the airlines have to be thankful that leisure travel has continued to be so strong. And as we've thought about the pending
that's
recession,
bad.
soft
Bad
landing,
dink.
whatever we want to call it, is there is an expectation that demand for air travel will at some point begin to come down. And that's been an overhang, particularly for the domestic discounters who get most of their business from the leisure travel.
So for right now, we know most people have jobs that want a job. Tim, which names are the ones you would invest in or you believe in for the long term, if any? All of them? None of them?
Well, it's
He's got ones for 8-1.
to choose from right now, and we've
Wait,
tended as
how does he have a
investors
two?
always
Oh,
to look for
SPY.
the simplest business models that have the most flexibility going in and out of difficult economic times, which would lend you to look at the domestic discounters. But they've had the worst year. So maybe it is a time for people to rotate out of the ones that have done the best, which have been the large integrateds, and move towards the domestic leisure-focused discounters.
So you think they may have a chance. Rebecca, what do you think? I mean, where do you see some potential here?
I'm concerned about Southwest from an operational perspective. I noticed that their pilots union is a lot more focused. They said on operational efficiencies than, actual pay increases. Just pay isn't going to satisfy them this time. I think it might be because
prime to break out.
More than one time that they have a shutdown completely of their entire fleet across the United States, which is just death to an airline that burns through cash on a daily basis at such an astronomical rate. So, demand and supply is all about the airline game. That is economics 101. And if people stop demanding it, they'll stop flying and the airlines will have to adjust. So these pilots deserve to be paid, but let's see how all of this really impacts demand going forward.
What's your outlook overall, Rebecca? I mean, when you think about the consumer, they have jobs. So we look at casinos, we look at airlines, hotels, cruise lines.
I know that everyone that wants to have a job could have a job. We obviously did have the overall employment availability come down over 10 million to, still 9-something million. But still, Nicole, I mean, I know people can work if they want to, but there's just this weird dichotomy of people that can work but aren't working because they're not happy, or the economy, just wage inflation and everything. We're just in a stalemate that is going to go one direction or the other in a market fashion pretty soon here. And unfortunately, I'm not thinking that it's going to go the way I want, which is full recovery, a backswing, everything's back to normal. I don't think that that's going to happen. I think we still have a lot of economic pain ahead, especially with the global macroeconomic situation we're facing.
What's your outlook when you think about this and how you
it doesn't make for great television to completely agree with the other guests, but I think she's really hit the nail on the head. There's too much uncertainty in this industry, and the headwinds that we see, whether it's fuel prices, pilot costs, the multiple of issues with the FAA and the ability to have planes in the air, make it a very, very difficult sector to invest in. regardless of how much people continue to fly.
Yeah. Thank you both so much. It's great to see you both. And obviously, we know summer season has had a lot of demand, but we will see what happens going forward. I, too, know people who probably should have a job, but aren't taking one. So I get it, Rebecca. I get it. I will always have a job. I'll have 2 or 3 or 6.
We'll keep working.
If
Me too.
Thank you.
I'm with
That's
you.
why we're all
Thanks,
here today.
Nicole.
Thank you, Tim Lesko, Mariner Wealth Advisors, Rebecca Walzer, Walzer Wealth Management. Thank you both very much. That's going to do it for us here on Trading 360. I'm Nicole Petalides. I'll see you later at 2 p.m. for the watch list. Keep it right here. Fast Market is next.
Iron Net's not breaking out yet, but looks ready. Chipotle is looking like it wants to fill that gap now and not be a good island boy like it should be. That's right, Phil. Wasn't gonna say it. Don't want to get the song in your head. But it's there. ALLR. High or low? Yeah, might have a little move back to the WAP. Maybe. A long ways up there.
I'll pull it up here, get the real-time data and sort of the surprise difference. But kind of a quiet start to the week thus far. I think we heard from Goolsbee this morning, one of the Fed's presidents, and kind of just kept that optionality on the table. But I think the market kind of understands where we sit here. Inflation has rapidly slowed. It's not deflationary by any means yet, but certainly well into the midst of disinflation. Japan can't help themselves in terms of the debt buying, and so you just see a pretty big move in the yen. That's buoying the U.S. dollar index. I think that's kind of an interesting part of the story, as that was a big story at the end of last week, was that the BOJ sort of said, you know, our 0.5% limit, we're not going to expand that, but we might let it go all the way to 1%. And that was sort of seen as a surprise, but also an important step if we're ever going to see any sort of interest rate normalization in Japan. But I do have those numbers. S&P 500 right now, we have 80, if we do some rounding, 204 of the 254 names, which is about 81%.
Top's in a bit of a short squeeze.
Positive surprise. And this on an aggregate is about 5.5% above those expectations right now. If you kind of
I don't think there was much of a catalyst that started this.
This has been a robust earnings season thus far, but it's from a place of a low bar being set.
Right.
So if you actually look at the actual growth that we're seeing in these, you're only seeing just under 4% earnings growth. And so this is kind of interesting given that, you know, inflation's about that same level. So you're not seeing a ton of actual, you know, nominal growth. It's or real growth, I should say. It is just sort of that's the pricing picture right now, and earnings are sort of ebbing and flowing with that.
Yeah, I think you make a great point there, because we are at you know, a beat rate in the S&P 500 that's nearly 80% for earnings, but the growth level on those beats is one of the lowest levels that we've seen over the last couple of years. So that's something to take note of.
Ag moved back down,
on that
bounced
lower
on
bar
VWAP.
that you mentioned, Alex. But a couple of stocks that are moving today here, one to the upside and one to the downside, due to some analyst upgrades and downgrades out of Morgan Stanley. Let's bring in Jenny Horn, markets correspondent, here to help us break down this Adobe CRM boxing match here between the upgrades for Adobe and a downgrade for CRM.
Yeah, but both pretty optimistic price targets. So it's all relative to me when you have an analyst that's downgrading the stock but then raising the price target so significantly. I always think that's like a half-committed downgrade here. But we did hear from a Morgan Stanley analyst on both Salesforce as well as Adobe, downgrading Salesforce, though, to equal weight from overweight, with a raised price target, though, of $278 a share. That's up from $251. Also is well above the consensus among analysts that are covering Salesforce. So that, to me, is a little bit questionable, but nonetheless, they did say that while confident in Salesforce's long-term opportunity to further penetrate large enterprises, as well as near-term catalysts, including margin expansion and price increases, these are now in the rearview mirror, and they think remains a longer path to realize these generative AI benefits. The path to shares working higher from here, they said, becomes increasingly centered on showing upside to growth expectations, and they do expect improving core demand to take time to be reflected in Salesforce's subscription model. So that was where I'd say there's like a stark difference between Salesforce becoming a subscription model. Adobe is already pretty much there. This has been the more longer-term story for them for the last 5 years. They've already very successfully adopted this subscription model. So we are seeing Salesforce shares down about 0.4% now in reaction. But on the other hand, upgrading Adobe to overweight from equal weight with a price target of $660, that's up from $510. That's so significantly above where they currently had it. The analyst does say there's greater clarity on the company's AI-enabled products, and the monetization roadmap increase in the firm's confidence in re-accelerating the Creative Cloud organic growth engine. They also say a return to mid to high teens earnings growth over the next 3 years does warrant an upside to Adobe's multiple. Now, both of these names don't report for quite some time. Salesforce is the end of August 30th. Adobe is September 14th, so we do have some time before we get those quarterly updates. But Adobe, as you can see there, has been on an absolute tear. New 52-week highs today at around $551 a share, names up 4%. Both of these names have an average rating of strong buy among the street analysts. They both are very loved, but Adobe has been the clear outperformer, at least on a year-to-date basis.
You know, Jenny, these two companies are both obviously in the kind of cloud software space, but I don't know how much that they're really comparable, but I love that you brought up, of course, the earnings announcements being kind of later in the season, and you can see this is having an impact today. Salesforce a little bit weaker, Adobe, of course, a little bit stronger here today. But when I think of Adobe, I think of a more consumer-facing company selling things like Photoshop. A lot of students maybe subscribe. Salesforce is like entirely B2B. I mean, they're selling customer management systems. So obviously the analysts weighing in here, kind of weighing valuation stuff. Anything else sticking out on these two names?
The one thing, Alex, I completely agree, first of all, that it's like an enterprise server and then more of a individual consumer server. But the one thing I would say is that's comparable about both of these names, I've used both of them. I've used Salesforce and I've also used Adobe quite a bit, is the fact that these are both relatively high-skilled, complex interfaces to learn. Frankly, they take some time, so there is a degree of then stickiness, and once you've learned Adobe's tools, or Salesforce for that matter, you're sort of stuck with it because it takes a good amount of time and investment to really fully comprehend it. It's just such a high level software platform. So for that reason, I think that you have very loyal customers to then both of these two interfaces. It just depends on like the scale. Obviously Salesforce is a much larger customer, but for that reason people really love both of these products. So from a consumer loyalty standpoint, they both do very well.
Yeah, especially CRM during their last earnings. They did come out with some more efficiency conversations, but their profitability and margins did grow also. All right, great stuff as always, Jenny. Appreciate it. Jenny breaking down Adobe and CRM. Alex, real quick here, Goldilocks scenario for stocks at this point?
And is it ever Goldilocks scenario when you're on your highs for recent trading? I think that makes it a little bit more difficult. The valuation story is getting a little bit harder to digest, if you will. So I always try to think of things, Tom, in a risk-reward kind of viewpoint. And so you're never going to be, batting 100 or 1,000 rather when it comes to directional speculation. Sometimes the market's going to go up, you think it's going to go down. Sometimes it's going to go down when you think it's going to go up. So I try to look at things somewhat probabilistically, and at some point, you're just not buying it at a good deal. I don't know if that's the case now or not, but I mean, we just watched this market essentially go straight up for 900 points, it seems, in the S&P 500. We're like 1,100 points off the lows. That's substantial. That's 30% or thereabouts off those lows. It feels like you kind of missed it if you've been waiting this whole time. Do you really want to pile on and get caught kind of on the long side if there is some sort of a pullback?
Yeah.
There's always this trade-off though, because on the other side it's, if I wait and I wait and I wait, that's how you get into this situation to begin with if you have been waiting. So at some point, depending on your time horizon, your risk tolerance, you kind of got to let those short-term market movements, I guess, go to the side. But we're talking about things short-term. I think there's tons of risk. I think we have two risks this week in Amazon and Apple earnings. Those two fall flat. I mean, that's going to settle the score that's been mostly kind of a tie thus far for mega cap tech. Netflix, Tesla, Microsoft all lower. Alphabet and Meta sort of doing their best to offset that. We might find if you get Apple and Amazon moving the same direction, this market's a little bit more red this week.
You bring up a great point here because of the optimism that the market's given us. Inflationary data has been trending the right way. Earnings beats better than expected. But these are two names, and I've seen it over the last several weeks here. The amount of price target hikes, and not upgrades, but just prices and optimism for these big tech names, they have that potential to crack if they don't meet those expectations and guidance moving forward. We saw it out of a couple companies already that you mentioned in that big tech space. Is that, because you're thinking about it the way that I always think about it, is that, hey, we've run up so much. I mean, the NASDAQ 100 up over 40% so far this year. I mean, why would you look to get into it now with the market still yet to prove things? But at the same time, now we're starting to get economists and analysts raising price targets for the end of the year for the S&P 500 because some of the uncertainty and concerns that we had just a few months ago have kind of panned out for the better.
Yeah, so this is a complex topic, but the one thing I will say is, as the kind of the counter to the point that we're making is, look, markets generally carry a risk premium. That's why they have a positive drift. there is no mean reversion in price. If someone tells you
$5
that,
billion
you know, you
loss
may
in
wanna
EVs.
get a, you know, something
Jeez.
else to look at. Volatility, implied volatility, does tend to mean revert. So if it's very, very low, historically over time we've seen it kind of normalize to its sort of long run average in different products. Same way when you get a big sell-off, implied volatility spikes, you get VIX in the 40s and the 30s. It doesn't tend to stay there for a really long period of time. It does tend to normalize down towards those long run averages. So that's where the mean reversion is. The mean reversion goes from calmer times to a little bit choppier times back to calmer times, and it sort of ebbs and flows that way. The market doesn't mean revert in terms of price. So there's nothing that says that this market ever has to go lower than where it is right now. Right. So you can't always, you know, wait for that. But at sometimes, if you're going to be an active portfolio manager of your own assets and you want to have sort of the trading, you have to apply some level of, you know, being nimble. You have to be a little bit price sensitive because that's one of the variables that you can control at order entry is what price, if I'm using a limit order.
Thanks for the reminder on the thumbs up. We're at 28 on the day. Thank
so
you
when
guys.
Look at this right now. You talked
Appreciate
about
the 28 likes.
Sort of the picture changing, analysts getting more excited.
Yeah, I think GME's going to come down.
Being beaten by a pretty nice rate right
I think
now,
it's got
being ratcheted up. All of this
broke through this
half
support
of the year comeback to actually
so
happen.
To play out.
I think the next support for it could be this horizontal, but I think this will hit first,
we've seen obviously what real
which
GDP
might be higher.
I think it's like 4%.
We'll see where it hits, but
okay, that's what it is. But the nominal level
diagonal support, maybe around 20 bucks.
Inflation. So the actual amount of spending that's happening
that fails.
is coming down with prices slowing
At
down.
18,
so that's something to watch.
That fails. 15.
Written in stone yet that there's going
that
to
fails.
be this
10.
Second half comeback. I think that there's still a ton of recessionary like risks out there.
EL squeezed on that bankruptcy news. Noise.
That's the question because we've seen tough times lead to lower rates and that has been positive for the market. And we've seen situations like 08, 09, 15, 16 where those more bumpy landings and obviously the great financial crisis much more than that leads to tremendous downside in stocks. Right. So if 2020 is what we're comparing to, maybe that's a positive. But if we're comparing to 15, 16, or 2008, 2009, it's a different script.
Right, definitely. And if you look at some of the earnings that we have coming up, we mentioned the big ones, Amazon, Apple. We got AMD, Uber, Starbucks. We've got some consumer names in there, some industrials like Caterpillar. We're going to talk a few today. But as far as there were some of the big events this week as far as data goes, what are you focused on? I mean, we've got the Friday, July jobs report. That's going to be key at this point. But anything sticking out there? I mean, we've got JOLTS data. We've got ADP, which was far off of what we saw in non-farm payrolls. But what are you focused on here?
I think every single one of these events that's listed on this screen is important. However, the last three, you can circle and maybe underscore, bold, highlight those with red pen because those are the most important. That being said, there's not a ton of huge earnings the next few days. There's some ancillary names like Uber that we're going to, I think, get tomorrow morning. Those type of names are important, especially if you're invested in them. I mean, these are popular traded stocks, but Uber going up or down probably doesn't move the S&P 500 the same way Apple or Amazon does. So from a macro standpoint, I think the jobs data for the month, non-farm payrolls, of course, and then Apple and Amazon are going to be your three biggest events, clearly, and they're all back of the week kind of events, Thursday afternoon, and then of course Friday morning. But the JOLTS data is interesting because you can't find a more optimistic viewpoint of everything. Right. Okay, one, it's backward looking. So if you're worried about the trajectory going forward, you're looking backwards into time. It's not going to really help you. But jobs data in terms of job openings, there's tons of stale job listings. So you're looking at the most optimistic picture of the labor market you possibly can with the JOLT. So if you start to see that cratering, which I don't necessarily think is going to be the case, but if you start to see that, that's a warning sign. That should be flashing. So that's certainly what I'll be watching.
Right, because last month, JOLTS data was under 10 million for the first time in a while, and that was actually seen as a positive. I still think there's 1.6 job openings for every person that's actually looking for a job, and jobless claims numbers continue to come in under expectations. Real quick here on Disney. We've got Disney earnings coming out, in about a week and a half here, Alex. But Barron's came out with an article this weekend stating how, hey, don't bet against Disney. This is the right time to buy. I don't like when a newspaper. Barron's used to be like the Bible that I read all the time every weekend when I was a trader down on the floor. Not so much anymore. You can get some better information. But the stock's relatively flat on the year. They've had some missteps. They had another dud at the movie theater. Is this one of those names is if the consumer really does start to crack, we got oil prices back above 81 bucks a barrel. If that inflationary pressure continues to hit Disney, where they don't have park attendance, nobody's going to the movie theater, there's still some outlying uncertainty here, right?
There is, but this is a situation now where you're looking at a name that is certainly in the discussion. I'm not going to ever say something is certain one way or another, but it's no longer, I think, you couldn't necessarily consider this on the high end of its range. So let's say it's in the value discussion, but for reasons that you describe, which is they've done a lot of things from an execution standpoint poorly recently.
Yes.
A lot of their new content hasn't been well received. The Disney Plus bump is all but gone at this point. Subscriber growth there hasn't been there. So now they're relying more on goodwill and sort of their long-term, more core businesses like their parks and existing brands. This company has several decades of, almost a full century of kind of brand being built and powerful brands underneath its portfolio and goodwill with consumers. But it doesn't take much, as we've seen with some companies recently, Bud Light comes to mind, to really disrupt those ecosystems. And I don't know that Disney's at that point, but you come out with enough bad films or films that people don't like, they're going to start going to different films, or they're not going to, the whole ecosystem is built on good film experience, makes you like the character, makes you want to go to the park, maybe go on a cruise, and it's this big circular thing, sell merchandise. If you don't have popular brands or the youth that are coming up don't relate to them or like them, they're not going to buy the toys. They're not going to want to go to your park.
Right.
So it's scary what's happened with Disney in terms of some of the disappointment, but it's still Disney, and I don't think we're at the point yet where we can write it off.
Right, and get a nice little bump on that article over the weekend, up over 3% today. But I'm hearing rumors, Alex, the lines at the parks are not as long as years past.
Discounts in the holiday season, I heard as well. That's usually not a good sign.
Boy, usually they're raising prices into the holidays. All right, we'll keep an eye on that one. They've got earnings in about a week and a half. All right, let's take a quick break here. When we come back, we're going to take a look at one of those names that reports earnings tomorrow morning. That's Uber. The rideshare company has rallied nearly 100% so far this year and reports ahead of the open tomorrow. Coming right back.
IronNet did break out a little bit there. Next chart still looks good. Still like it. I don't know if I like my 1.5 calls for August, but chart looks pretty nice. Hmm. Alright, climbing back to VWAP here. Lots of chop today. Funko's up 8.7. There's earnings on the 3rd. Maybe they'll announce something with GME. That would be neat. BBBYQ down another 58% today. That's crazy. So fast. It was just at like $4.50. At $5. I was averaging in up here at $4. Now it's 55 cents.
Butterfly, essentially selling a put vertical, selling a call vertical. They converge together and meet at the
nice cuts.
Strike of 50.
Yeah, I think one looks pretty good.
This risk profile that you can see up there on the screen that
I think it looks pretty nice.
Where it is like almost a perfect
Holding up a nice
triangle
bull flag
there
overview
that
up
meets at
there.
that strike. That is
Like
your
the
best
break
case
of this
scenario. That's the
resistance.
apex of that profitability graph, and that's where theoretically
Say 14 cents is kind of the first profit target.
Received. In this particular
And
example,
then 16
around
cents.
$4 credit. I don't know where it is in real time, but if we use that $4 credit for our illustration purposes here, Tom, that would be only theoretically the max profit right at 50, right at expiration, if you somehow manage to have all these options expire worthless. It's a low probability
RSI
event,
divergence
but
here
it's good to
also.
know where where the best case scenario lies. Most importantly, though, that extends a pretty wide net around the share price, where you have a break even down at 46 and one all the way up at 54, creating an $8 wide window where the closer it is to 50, the more profitable this one could stand to be. It's all short-term, expiring this Friday, so it should be fairly reactive to the earnings volatility coming out post the event, assuming that happens. But of course, there's always a chance that would not. But because it's $8 wide spreads, $4 credit, if you subtract that out,
Oh yeah, I went all in on GME. Sold everything and full ported it back into GME. They had news. They're buying Funko and Barbecue.
Stock can only be in one place at a time. So,
but I saw the most value in GME.
Risk in both directions. Really only have risk at one at a time.
That's what you missed the last hour.
Above our,
less active, Ace? You already not active.
At 58 or below the put strike at 42.
Going back to the States, a little vacay.
Let's look at that one again. August 4th weekly, so just a really short-term earnings type example here. Selling the 50 call and selling the 50 put, buying the 42 put, buying the 58 call on that.
Mullen the most shorted? I don't know.
Basically
definitely up there.
58 call.
Well, there's a reason why it's shorted.
50, 42 put vertical. $400 in risk per spread outside of those.
Borrow fee is
level and 58
low.
Level on this. So in
doesn't
essence,
look very
this is a type of
promising
strategy where
as
you
far
don't
as the
want
borrow
stock
fee.
to move more than that one standard deviation, trading a tight range where you're going to take advantage of time positive time decay or theta, where the price of this short iron condor or short iron butterfly, we like to call it, with the same common strike.
Yeah, this isn't something I'd hold very long.
It actually contracts in value if it stays between those two break evens that Alex mentioned of 46 and 54 on that one. 4 days till expiration, so really short-term positioning here. But a good look at a different strategy that's taken advantage of higher implied volatility that's in the name going into these results, that event risk that we got here. All right, great stuff as always, Alex. Let's take a quick break here. When we come back, by Andy Swan from Likefolio for discussion on Wayfair, which was upgraded today ahead of their earnings on Thursday morning. Stock's up over 100% so far this year. Coming right back.
No one stole the pool water. Barbacode. When's Pac West earnings, Cameron? They're coming up. Check here. See if they announced 10/26 until October. Wait, was this earnings right here? 7/25. Okay, Webull just doesn't show it sometimes. Camping World has earnings tomorrow. us some insight into travel. Revenge traveling still happening. Austin? Dude, it's gotta be hot there right now. It's gotta be hot where you are too. Did you drain your pool back down? You're trying to hang on. Barba coating selling off a little bit there. Down 5%. Here's the level. Here's the level. I want to see it hold. Think Mullen will stick at some point? Like, stick around? Not out of bankruptcy? Stick out of bankruptcy? A low and hold. I know it really hasn't held any lows, huh? Vacate and business. What's Tesla doing? Pretty flat, man. When are charge point earnings? $8.30 post market. Buys come down a little bit here. Almost made it to VWAP. Just chopping around still. Tupperware's coming down to VWAP. Smile Direct breaking out there some more. It's up 28% now.
And you know, in unit type of deliveries, which have to be quite high margin. Where do we see this relative to where we were at its peak? I'd imagine we have still seen a general drop off, but is this comeback something to
Plus
continue
2
to
feet
monitor?
because of the crack?
Yeah, I really think that it is. You know, we see this with a lot of companies that benefited greatly from
Dude.
from COVID. You know, the market got ahead of itself, but the company itself
Don't need to worry about pumps and solar filters and UV cleaners.
in a really impressive way.
You have sinkholes next to it and a crack that lost you 2 feet.
During COVID, during the pandemic,
That's crazy.
the resulting drop-off
That's sketchy. Sounds like your property's about to slide into the Rio.
Experience with their customer to understand what those customers wanted, what they liked, what they didn't like, and now they're able to come back with a really quality experience that does allow them to get kind of into that fat part of the curve beyond just the early adopters and the innovators and into just the general shoppers, you know, like you're talking about with your mother. And so I think that's a pretty common story, and one that Wayfair could say, hey, maybe that was an outlier event that got us all of those customers to begin with, but we learned from it so much that we actually think we're only in inning 1 or inning 2 of furniture shopping online, and
The
we're the
VWAP on
company to beat in
Tupperware.
this space, and I think they have a compelling case.
Here's a scenario that I'm coming up with, Andy, why we're seeing a resurgence maybe in home furnishing sales. One, new home sales really good, right? You need to furnish that new house that you bought from Toll Brothers. And then on the other side, existing home sales underperform because nobody wants to move and double their mortgage rate, right? Is that maybe lending some of the data, the positive data that you have, to this story? Basically, is that, hey, if I'm not moving because I can't buy a new house because there's no inventory and I don't want to double my interest rate payments on my mortgage, that, hey, I'm just going to buy some more furniture from Wayfair. And it's almost like you're on lockdown again, like we were in the pandemic.
Yeah, just really insightful commentary there, Tom. You've nailed it. You know, you're stuck in the same kind of way. You know, it's not a mandate from your governor, but you're stuck in the same kind of way because you're not going to give up that 2 7/8 mortgage that you have to go move somewhere else and pay 6, 7, or 8%. So you're stuck in this house, and you want to make it better. So I think the natural tendency is to upgrade what you have, and Wayfair has proven itself the place to go to do that.
Along those lines, last thought here, Andy, has that kind of demand pull forward, you know, maybe you were on the fence in the pandemic, like you said, you upgraded everything because you were at home. Has that kind of demand shift sort of worked its way out now, and it's time to even upgrade some of that stuff we got 2-3 years ago, and this company can actually return to growth because we need this
coffee.
stuff again?
Upgrading every 2 or 3 years on a house.
So. I think, you know, the demand pull forward was great while it was happening, and it was a terrible hangover when it wasn't. Now kind of the hangover's over, and we're probably starting to get back to a
GME is popping up, breaking out there.
Normal, not a new
up
normal,
13 and a half.
Normal. And that's where companies like Wayfair that have learned so much from both experiences, the euphoria and the
Got some nice room up to
on a normal kind of day-to-day economic reality.
All right, so you got positive data going into this report.
$5.
Great data as always, Andy. Appreciate it. Have a great day.
Thank you, you too.
All right, that's Andy Swan, co-founder at Likefolio, breaking down the data for us. Here, Alex, on that one. You know, I was sitting there thinking, how is their data positive when it seems like everybody's traveling and nobody's buying anything, electronics, home goods, anything like that? But it kind of makes sense. If you're on lockdown in the existing house that you have, you can't move because there's no inventory. Hey, I'll buy some new furniture to spruce up my house, and new home sales are the only thing selling, and you got to furnish those houses. So looked at a strategy that kind of fits into the mold of Likefolio's data here. So this example takes advantage of move to the upside. The stock's they've got earnings coming up later this week, so it's a really short-term example here, Alex, that we're looking at. But it's the August 4th weekly series. Buying a call condor. These is a 4-legged spread. All calls on this one. Buying the 75 strike call, slightly in the money. Selling the 80 strike call one time, selling the 85 strike call one time, and then wrapping it all up by buying one of the 86 strike calls. Paying roughly, we've got it up here as $1.75 debit.
Yeah, 2 feet is a ton of water for your pool.
It's probably trading closer to $1.95 right now, but for this example and illustration, $175 in risk. apex of profitability
Yeah.
between that 80 strike and the 85 strike.
Oh, when the river
even, Alex,
when the river
above that break
raises,
76, 75
yeah, I
is
could see
all
that for sure.
profitability on this example.
water
76,
rushing in.
75. We're already above that
Sketch.
level at this point. So even if the stock were to stay here, it could be profitable over the next 4 days until expiration on this one. Alex, give me your thoughts here on the call condor, where you're not outlaying a ton of capital on this one. You can hit basically a double on this one if you get towards that 80 to 85 level. And the option market's pricing in a 13% move in the stock.
Yeah, first off, it's a buying premium strategy, which oftentimes we associate with negative theta decay. Because your break even in this case is lower than the current share price, even at the current price of closer to $2,
Pitching on a wheelchair.
slightly positive theta decay. So buying premium, but because of how it's structured, break even below the current share price allows for that positive theta decay, which I think is pretty important, especially when you're looking at something around earnings. Secondly, this
SDC
is
still up
showing
there,
something very comparable to what we
30%.
looked at in the last trade in Uber.
Internet holding
which
up
is,
well.
as you adjust your strikes and you kind of change the inputs that you can control at order entry, you can create risk profiles using, basically, as Kevin would say, sort of foundational or fundamental trades, vertical spreads, for example, and use them as building blocks to create a risk profile that's a lot more complex, but when broken into the parts is not that complex. And so, again, 2 vertical spreads. One in this case is buying of a debit spread, the other is selling a credit spread, all on the call side. But this creates a risk profile that has no theoretical upside risk. But as the same goes for the Uber trade, the same for the Wayfair, this is all customizable as available by strikes available in the expirations that the individual would want. And so this is one way to look at it, but by no means is this limiting.
Yeah, I like the risk-reward setup is pretty decent on this one, just due to the fact that the input cost on this $1.75 debit is low. But if you were just to buy the 75.85 call vertical in there, $10 wide, you'd pay basically double what this is trading for right now. So yeah, cost going in, risk involved in that is what you have
Risk
to.
goes up with that cost going up.
Yeah.
Break even goes higher. Probability goes down. Risk goes up. So
Reward goes up a little bit also, but at the same time, yeah, you have to.
There's trade-offs.
Yeah, trade-offs on everything, and you have to kind of assess your risks going into a trade. Everybody likes to think about the reward. We like to think about the risks and what you could potentially lose. All right, great discussion there, and thanks to Andy Swan. But coming up after the break, we're going to take a look at Western Digital, which is up about 35% so far this year, and the company reports earnings after the close today. Stick around, Fast Market's coming right back. contributor here on the network. Give us a market update here, Ben. Relatively flat, kind of treading water here, but the Russell's doing well today.
Russell's doing well, and the longer-term time frame, Tom, really speaks to some of the strength we've seen even this month. Another up month for the SPX, it looks like, and if higher this month, it's going to be the 5th in a row, the longest streak we've seen since August of 2021. S&P's up to 45.94 today. You had the NASDAQ up to 15,803. You mentioned strength in the Russell. It's leading today percentage-wise, and topped out around 2,000 before coming off. The Dow relatively contained compared to the other four majors, but here you can see the three players that are negative on the day are somewhat limited in terms of weakness here, fractionally lower. This comes after dust settles from a strong week last week. This week, the focus is going to be on some of those big tech names, Apple and Amazon, and I think it goes without saying in terms of data, the focus will be on Friday's jobs report. But two of the four majors into new highs into the end of week last week, so still holding on to these upper levels here, Tom. Limited in terms of rejection as of yet.
Yeah, Ben, and one of the outliers here as far as asset classes moving. So far in July, crude oil up over 15%. This is the biggest gains that we've seen since, I believe, 2021. I mean, this is a massive move, and everybody that's cheering this inflation data that's been going down better maybe turn that around, because we're back above 81 bucks a barrel for crude.
Yeah, I think the key threshold there is going to be like 85, right? That's been the upper extreme of the range. You can see it on the chart that we've been in basically all year, but 81.72 is where we topped out this morning. Tom, everybody, IEA, the EIA, they expect demand to outpace supply. We saw, if you remember, mid to late May, the Saudi energy minister talking about warning the shorts, watch out, right? And the weakening dollar, I think all of that feeding into it's not uncommon to see stocks and crude rally, a sign of strength here, I think, in many ways, and expectations in terms of stimulus from China. Eventually, many expect to see that demand come into play. But I did notice AAA reporting the national average for a gallon of gas at $3.75, up from $3.54 a month ago. And if you're looking at the crude chart, which is relatively contained, keep an eye on the RBOB chart, Tom. We're breaking out to April highs, or took out the April highs, I should say, up 6 weeks in a row of higher this week. So gasoline futures leading the way to the upside here.
Yeah, RBOB, the gas prices, Ben. I was in Texas this past weekend and paid like $1 less a gallon for my rental car than I do here in Chicago. Pretty disheartening, but yeah, RBOB at 11-month highs in the previous session, a little bit weak today. All right, great rundown here for us. Thanks to Ben Lichtenstein, host of the Future Show, breaking down oil and markets. But now let's bring in George Tillis, senior markets correspondent here on the network. George, we're talking Western Digital. This one's been a choppy trade for years, George. It seems like the seasonality and cyclicality of the memory chip space always seems to hurt these stocks. Then they do well. They get hurt again, some disappointing earnings. What's the AI aspect of Western Digital? Do they have any? Because are we seeing a trough in PC sales that might help them? But what is Western Digital? What basically give us a rundown here of the outlook for Western Digital, because it's had a nice little rebound here the last couple months.
It has. So I'm going to put this in the cyclical camp right now. We do see a lot of variability in companies like Western Digital and Micron, and even Intel. Intel's been reporting, or did report recently, and so did Seagate, which is a major competitor of Western Digital in the solid state drive, and of course the memory drives that are utilized both in flash and of course hard disk drives for computing and server markets. So there's a cyclical element to this business, and we may end up seeing a little bit of a run up here from a cyclical standpoint. I know you talked about Wayfair in the previous segment. That's a completely different company, but if you think about what's happening, there's been sort of a cyclical refresh going on in terms of furnishings at the home, but at the same time, during the pandemic, people bought new PCs, and it's been a few years. So we may end up seeing a cyclical push to the upside in PC sales, and that can certainly help companies like Western Digital. Now, there's also an AI element to Western Digital, considering that flash memory is going to be in high demand for AI-based infrastructure and productivity software. And so that's another potential catalyst for Western Digital. Now, if you look at the earnings report that the company's expected to publish for the quarter this afternoon, they're expecting a very low bar. They're expecting a $2 loss per share And that's about a 200% decrease compared to the $1.78 the company reported in profits on an adjusted basis last year. While at the same time, if you look at last quarter, they reported a $1.37 loss. So they're expecting a worse sequential quarter-over-quarter loss this quarter round, while sales are also estimated to be down 44% to $2.51 billion compared to the same quarter last year. So the bar is set very low for Western Digital. There's a couple things that they have been doing over the past couple of quarters. One, they've reduced CapEx. The other thing is they've taken actions to reduce operating expenses and consolidated production lines as well. So the elements behind Western Digital and companies like Micron, Intel, which are PC and of course CPU-centric based businesses, are cyclical upswings, and that could be a potential here for Western Digital. In the last few days, it's been trading higher in sympathy with Seagate, and we'll see if they actually report a little bit better than estimates, considering the bar is set very low for the quarter.
Yeah, and George, when you look at other players in this space, on the AI side, you've got NVIDIA doing well. AMD is getting dragged up with it. Yep. As far as you look at, if the company comes out and says, "Hey, we're having a trough quarter, we're seeing maybe a little bit of pickup into the end of the year," that could be a trigger to the upside, because you mentioned the bar is really low for this company.
Precisely. That's my whole point there, Tom. If you just look at the quarter, they're expecting to lose $2 a share. But if you look at the full year's guidance for earnings per share, it's expected to be down $3.61. So they're manifesting this quarter, assuming they do come out with the $2 loss. It certainly could be better or worse. We don't know. But that $2 for this quarter is the manifestation of the majority of the losses for the year. So it could be a situation where, if they come in a little bit better than estimates and raise guidance, we could see quite a move to the upside in Western Digital. But, you have to also consider the risks to the downside as well.
Right. Yep. Choppy once again, perhaps. All right, George, appreciate it. That's George Tillis breaking down Western Digital for us. Now let's get to an example trade here in Western Digital. Option market pricing in about a $2.80 move either way in the shares. Stock price currently trading about $42.60 on this one. So I looked at a strategy that's going to take advantage of maybe higher implied volatility in the near-term options that expire on August 4th, this Friday, and then buying something cheaper on that implied volatility aggregate scale. So I went and looked at a double calendar here in Western Digital. August 4th weeklies, you're going to sell. We're going to sell the 46 strike call and the 39 strike put. Buy those same options in the August 11th weekly cycle that expires in 11 days. Buy the 46 call, buy the 39 put. It's a double calendar position. You're paying a debit of $20. There's your risk on this trade, 20 cents or $20 in risk per spread. But look at that wide range that you have for this stock to trade in over the next 11 days to remain profitable, anywhere maybe down to 36, 37 on the downside, about 49, 50 bucks on the upside, where you can still remain profitable. The idea of this is that you're buying that lower implied volatility on aggregate, about 54% in August 11th, selling an 82% in the near-term options. You want the stock to move that one standard deviation at or near either one of those strikes, the 46 call or the 39 puts. But this takes advantage of that implied volatility divergence. So there's our example trade there in there. You got some short assignment risk on those short options going into expiration this Friday also. All right, that's going to do it for us today here on Fast Market. But stick around right here on the TD Ameritrade Network. Next Gen Investing is coming up.
New low of the day there on Les Spy.
Opening now and more
See
people
if we get a little inverse handle here on this inverse cup.
Services altogether are forecasted to be more buoyant as far as demand, which would benefit their mobility business. Their predictions for revenue from their mobility segment is currently pegged at around 4.4 million, suggesting an increase of around 24% on a year-over-year basis. We are expecting their overall revenue to come in around 9.3 billion on still adjusted losses of about 1 cent per share. Profitability would be huge for this company this quarter, but that's not exactly what the street is pricing in at this point. On the other hand, though, high sales and marketing expenses and costs that are associated with paying incentives to drivers due to changes in their business models in some countries are likely to have weighed on their bottom line in this quarter.
Yeah, and of course, all upvote, downvotes, they're not endorsements, they're not recommendations. We're just going to narrow these down. There's no right or wrong answers. These are all great names to go through. Uber, this is another one that we talked about on Fast Market. It's been a really, really, extremely positive name this year. Huge comeback in this stock. Uber Eats demand has hung in there. All the while, the traditional, ride-hailing Uber service has become, pretty robust. But we were talking about this, and I think it's a good point, and Tom was making the same one, which is this has been as much of a Uber, establishing its dominance and really putting a stranglehold on this marketplace as it's been sort of Lyft fumbling the ball as well, it seems. I mean, this is not a fair fight anymore. Uber has staked its flag as the dominant player, and Lyft is just kind of there as another option. Of course, they've really leaned in sort of the membership benefits, the fact that they have the ride hailing and they also have the delivery service for food items and other things. Allows that membership to make sense for those who are frequent users of both services or one or the other. But what a story in 2023 Uber has been, as it's made a just massive rally and really works towards more consistent profitability over time. Obviously this has been a picture that's been very AI dependent, but even so, even without those major breakthroughs, it has certainly made some pretty important turns, I would say, this year, and the street has rewarded consecutive earnings quarters. We'll see if they can make it 3.
I know. I'm curious to see if they can keep on this nice trend they've had this year. And Lyft, I will say, has gotten cheaper, so I have to imagine that's also affecting their bottom line because somehow the business model to me doesn't necessarily make sense if we're paying less for Lyft, although I'm, as a user, not complaining. But our next name today is Caesars. Now, Caesars, another name that's up about 40% this year into this report, also expecting to report their figures tomorrow after the closing bell. But Zacks is estimating their second quarter earnings to be around 33 cents per share, which would mark an improvement of 106% from the 16 cents they reported a year ago.
What earnings are after hours?
Revenue, we see that pegged at about 2.9
Mabel's starting to trip out.
Suggests an increase of around 1.7% on a year-over-year basis. Their second quarter top line is expected to have increased because of this pent-up demand we've seen starting in their group and convention businesses, improving on the overall market capabilities. Increased focus on sports betting expansion as well as their product enhancements are also likely to have paved a path for improved sales for their digital segment, which comprises their sports betting, iGaming, and poker segments. Now, they are also seeing right now their digital revenues pegged at around 158.6 million, which would be slightly above what they reported a year ago, while also increased investments in this digital business, as well as increased operating expenses are likely to have weighed on their bottom line in the to-be-reported quarter. So a bit of a mixed picture, less of a clear uptrend in this name, but gosh, over the last month, it's been a really nice performer, up 14.5% just over the course of the month of July. Now, we're down about 3% from 52-week highs, but another name healthily off those lows by about 86%.
Yeah, this is a name that got all the way down to $6 a share during kind of the worst of COVID, the high uncertainty and travel being shut down and everyone kind of playing it safe with their money as well. It's made a nice comeback. It's well off those highs that we saw at the end of 2021. Last year was not the best year for the stock, and you talked about this kind of slow but steady recovery that we're starting to see in these names. What I will say about this one is it's a much more U.S. target market as opposed to a lot of the other names in the gaming space that we talk about that have very significant Macau exposure. But as much as these we think of and associate with sort of win and take rates, in gambling, these are experience companies. These are, hotel rooms. These are shows and concerts and stuff that you see when you're at one of these venues. And of course, that big acquisition of William Hill cost them a pretty penny
Iron
as
it
well.
at the highs there.
Super interesting name, legacy player in this space as the online sports betting gets more and more crowded. This has been a key cornerstone of those legacy players. Looking forward
Mulling back to VWAP.
earnings. Next on the list is Amazon. This, of course, later in the week, but hard to miss the two giants on Thursday.
Right, so now our next two names are both Thursday after the close. We do have some time, like you said, but I mean, names that are able to move the overall needle of the market. So very important names to keep on our radar here. Amazon's up about 0.8%, also adding to its 59% run this year. Facing a lot of questions, though, on the impact of some of the cost cutting on its e-commerce growth and what AI could do to boost the slowed growth we've seen in its cloud business.
Yeah, he's got a lot of followers.
Now, when it comes to Amazon specifically, I was reading this D.A. Davidson note that said, like other big tech companies, this company has really focused on ways it can control its costs this quarter, which could help its margins, but would also need to see the impact to its e-commerce growth following thousands of layoffs and pulling back on its expansion of Amazon Fresh, which I did not know this until I was in the good old suburbs, but Amazon Fresh actually has physical locations like grocery stores. So I thought that was very interesting. I typically think of Whole Foods being their store footprint, but Amazon Fresh has been expanding into more brick and mortar. Amazon also began tacking on servicing fees to some of its Amazon Fresh delivery orders this year. And while we have seen some tweaks to its overall services, they've been charging now for home pickup. We've also seen some of these incentives that used to be free, now they're charging for with Prime. So in this view, what this D.A. Davidson analyst said is Amazon's playing a game of chicken and banking on some of their e-commerce offerings to not be offering a superior service instead of its historical approach of working backwards with the customer-obsessed approach. So we'll have to see if that's able to please the street. As we know, we got a big picture or mixed picture from some of the other big tech names that reported last week. Alphabet having a really nice move post earnings, Microsoft not so much. Now we'll have to see if Amazon falls into the winners and losers of these tech behemoths as far as its earnings reaction.
This is a super interesting company because it has focused so much on the consumer throughout its history, starting as an online bookstore, as we know, but wasn't profitable for the first 20 or so years, I think, of the company. But it was always very clear that it could be profitable. And when it flipped that switch, it's become one of the most profitable companies of any. And so it's always interesting when you're looking at a company that has so much tremendous scale. They don't have to do much to ratchet things up. And we've seen this on a smaller basis in a different market in something like Netflix. They crack down on the passwords to force new subscribers. They embed ads in some of those different purchasing plans. But you can see how they had sort of those aces up the sleeve to monetize things when growth started to stall. Amazon can do the same. They can ratchet up fees with things like Prime. They can add, fractions of a cost to each item, and that's going to make a huge difference when it comes down to dollars and cents in the end. And so it's hard to not think that Amazon is as one of those strong companies that always sort of has those cards left to play. But at the same time, it's very cyclically driven. Almost no company is a robust of a footprint, even if it's through e-commerce, to the everyday consumer. And if my old building is any indication, the amount of Amazon boxes coming through there on a daily basis never seem to be less than a giant number. So it's always fun to watch this one. And as you said, alongside Apple, which is our next one, if they move in the same direction, this market's moving.
No kidding. And even if they move in opposite directions, this market's moving, as Apple has been crowned the king of profitability, being one of the more profitable, if not the most profitable company throughout our coverage. Apple today making a just modest move higher, only up 0.2%. This name, though, has become more of a consumer staple than a discretionary buy, and that's why Apple is so interesting. Any details will be welcome on their iPhone 15. We heard there could be some production delays. And we also heard that the price tag could be going up. And we've also seen this recovery in China and growth in India over the last 6 months. Apple also did unveil its Vision Pro VR headset for just around $3,500. So there is some doubt surrounding that. We believe that really Apple has now seen some more structural challenges over the past quarter in terms of the mass adoption of this AR and VR headset. So we'll have to wait and see, obviously, what any commentary regarding that and any commentary regarding their margins and how we could see that improving with potentially a more higher cost iPhone 15. Apple and Amazon, though, what's so important about these names, they report on a week when we have 170 S&P 500 companies also reporting. So, well, there are so many other names to watch. Again, these names really have the capability to move that overall needle.
Almost $3.1 trillion in market cap, and that's just Apple. Combine in Amazon, I mean, you've basically got the Russell 2000 in those two names to put in perspective just how big they are in market cap. But, you know, as much as it pains me, those will be the two down votes just simply because they're on Thursday. We have plenty of time throughout the week to get back to them. We'll look at the ones with a shorter term earnings turnaround. I think we get Uber tomorrow morning and what, Caesars tomorrow afternoon?
Yes, so both of those names are reporting tomorrow, so we'll be keeping those on our upvote list, and we'll, I'm sure, be revisiting Apple and Amazon, if not discussing those all week long, as they are the two big names reporting. So we'll be looking at some technicals, as well as always, some example trade in both of our upvote names. Stick around. Next Gen Investing. We'll be right back.
No MOAS today? I suppose not.
Say entertainment, because it's not just the casino. It's so much more than that now, and they make like over half their revenue from the other stuff. We just associate it with slot machines and table games and everything else that comes with the casino. But it's hotels, it's restaurants, it's concerts, it's a whole entertainment company. But those are two upvotes, both pre-earnings looks. Let's start with Uber.
And Uber also is so much more than just Uber, the ride-hailing service. You have Uber Eats, you have Postmates, you have their freight business, which has been a little bit of a laggard in their overall revenue. But nonetheless, this name has not been a laggard. It's up about 100% this year, continuing to rip higher today. So here's now to tell us more of the technicals ahead of their earnings. I'd like to welcome in our chart master, Rick Ducat. So Rick, Uber has been a nice name to watch this year, and it has since not always been the same well-loved name throughout market coverage. But I just was doing a quick search on what the analysts were thinking ahead of this earnings event. Lots of top picks in Uber. So walk us through what you're seeing.
Well, the chart reflects that we've seen quite strong performance this year. We're up about 114, 115% off those yearly lows that we established in July last year. And we can see that even before we had this most recent leg up, it was really looking quite good. As I said before, we started a moving upward this year in a more mild upward channel type shape here, demarcated by those two white dashed lines. And then if you look at our last earnings event there, you can see that we had a big move upward here that took us
It's fine moving back down here. Looks like I made that little handle.
Those white dashed lines beyond that channel here. And since then, we're up 50% just during these past few months here. So
What
really
happens at the
quite
retest
impressive
low?
price action here. However, it has slowed recently a little bit. We saw a move that broke below, kind of sideways to below our purple trend line there, but it didn't really.
We do
fall
break
off
through
too
that
much,
low.
Really, rather it just resumed the uptrend at a less steep pace.
Let's see,
You can see
455,
that we formed another
64,
trend line there,
maybe even
that lower purple
455
line, giving
even.
us another channel to watch, much more narrow, much more steep than our initial one here. We also saw a move beyond the +1 standard deviation channel, and what that is telling us that we're 1 standard deviation away from our linear regression line, our blue line there, which is our line of best fit based on closing prices. So what this tells us is that price is at a relatively extreme point based on its own history during the past year. Now, as traders, this means it's up to us to decide if this means we're in for mean reversion, which would be retreating back toward that linear regression line, or trend continuation, which would be continuing onward and upward to that +2 standard deviation channel. And, I'm not saying it will hit either of those things necessarily, just which direction it's going to go is what I'm trying to say. And that's kind of the two main schools of thought in technical trading, mean reversion versus trend following. So, unfortunately, I can't tell you which way it's going to go. If I knew that, I would not be here. I would be, on some private island somewhere. But we can see that there's points to watch then, and that's what technical analysis can help us determine, is where we might want to choose strike prices, where we might want to look for support and resistance. So we can see that momentum is favoring the bulls right now. It's traveling into the overbought area. Things are looking a little more upward. Our moving averages are sloping up still. So if we do look for resistance, we could look to the upside at our +2 standard deviation channel, or before that, probably the upper part of our purple price channel there, near the 47.50 level or so. To the downside, or that's where our +1 channel is. Our +2 channel comes in near 54, excuse me. To the downside, our 21-day exponential moving average comes in near 46, and that's also roughly in line with the lower part of our channel there as well. So that would be some areas to watch.
Yeah, and I think, Rick, this name has been such a consistent outperformer. It's sort of difficult now. You've engaged what to make of it ahead of this earnings event. So with that in mind now, Alex, walk us through what you're thinking for an example trade. Obviously, we have earnings just tomorrow, so that event coming up very soon. Walk us through what you're thinking.
There seems to be an optimism around this name right now. It's made a really impressive comeback. It's been a strong performer, and it's had a really impressive couple consecutive quarters of earnings announcements that have led to upside. If you believe that that can continue and you're optimistic around this report, but want to use that elevated implied volatility that's in the name right now around this event, you could look to something like selling a put vertical below the market. So that's what we did. We've kept it super short term. Just goes out to this Friday's expiration. We're selling the 48 strike, which is only $1 below the current share price, but then buying the 45 strike to define the risk. $1 credit is 1/3 the width of the strike. So it creates a 2-to-1 risk reward ratio with a break even at 47. That is about $2 below the current share price. It would be inside that market maker move, but again, this is directional. It's a neutral to bullish outlook. It is not a neutral outlook. Only risk in one direction, that's to the downside. A move below the break even at expiration, and then of course below the long strike can result in a full max loss of $200. Anything in which these options expired worthless, you'd be able to capture $100, not accounting for the transaction fees. That would be if these options expired worthless. Again, that's most likely to happen if this is above $48 on Friday. And of course, that's the short strike for this strategy. This is the neutral to bullish outlook. You're a little bit more neutral to bearish. or potentially just neutral altogether. You can adjust the strike selection or potentially add a call vertical in here to create an iron condor to get a more neutral look. But one way to look at it here, Jenny, neutral to bullish. Definitely more bullish, I would say, more so than even neutral, given that that strike is only $1 below on a market maker move nearly $4.
Right, now to shift gears here and look at Caesars Entertainment, which I do think it's important to differentiate. It's not just Caesars. I affiliate that with like the hotel in Vegas, but such a larger company than that. Another name seeing some outsized performance today, but also on the year, up about 40% so far in 2023. So Rick, walk us through what you're seeing. This name reports tomorrow after the closing bell.
Sure, another chart showing some quite strong performance during the past year. This one is not quite as strong as our last one. It's up about 87% off the lows, which is still, impressive. That's not anything to sneeze at there. And we can see that this chart is kind of interesting because we had this drop down into those yearly lows near 31. We had a big move upward then, and we hit a ceiling near the 55 level, that green dashed line there. We did break above it a bit in terms of intraday price action, but we really didn't do much in terms of closing above that point after coming near it many times here. So the 55 level was kind of the area to beat there. And we did beat it fairly recently then. We moved up above that point. We've been traveling in an upward channel for several months now. And we can also see that we are having our moving averages trending upward. Our yellow 21 day is rather significantly below price, lining up right around that 55 level, actually, oddly enough. So that could be an important point to watch to the downside here. But our moving averages are trending up. Our standard deviation channels are angled upward. Not seeing a whole lot of warning signs in terms of that. However, looking at the RSI, we do see a potential warning sign here. We see that the RSI showed a little bit of bearish divergence here. As price was making new closing highs, RSI was not making new highs. And you might have to squint to see it a little bit, but it's there. It was kind of counteracted by the fact that we were going into the overbought area at the same time, but we slipped back out of that overbought area, that threshold of 70 that separates bullish momentum from, I guess you could call it like strongly bullish momentum here. But it did back off though. We are still in the bullish territory, but we are not making new highs anymore. And the RSI is falling off a little bit here. So looking at support and resistance to the downside, the support level that I mentioned, 55, is actually even more important than we had suggested at first because it's the site of our old highs. It's the site of the 21-day exponential moving average. It's also the site of our +1 standard deviation channel. And these channels can be support or resistance. So we've got three things kind of aligning near the same area around that 55 level. So that could be a key one to watch. To the upside, first we've got another confluence. We've got our 60 level, which would be our +2 standard deviation channel, and the upper level of our trend line there. So we've got, once again, multiple indicators or drawings coming together at the same level. If we do keep moving beyond that +2 channel, the +3 channel comes in right near 65. So 55, 60, and 65 were the three levels that caught my eye as we looked at this chart here. That could be pertinent as we were choosing strikes or trying to place a trade here, Alex and Jenny.
Yeah, Rick, I think it's really well put, and obviously we'll be watching this name very closely ahead of its earnings. We will leave it there. Appreciate the technical breakdown, as always, Rick Ducat, our chart master. So now in trading this name, Alex, considering a more neutral example trade, just given the fact that when we have seen this outsized performance, like Rick said, that strong momentum is now just sort of like upwards momentum. It's lost a little bit of its traction. So leaning into a more neutral example trade.
Yeah, and for those who caught fast market, this is the example trade
strategy
that we looked at in Uber, actually. So bonus potential trade illustration for those who saw that or catch the replay when it's on the tdameritradenetwork.com website. But looking at an iron butterfly slightly above the current share price in Caesars Entertainment, sort of leading the stock higher with a neutral strategy, centered around the big round number of 60. Selling that 60 straddle all in this week's expiration, buying $5 wide wings. If we're able to do this for a $3 credit, it'll create a window of profitability potential between 57 and 63, in which the closer we are to that $60 mark, the more profitable it stands to be, as the risk profile will illustrate. Because it's a $5 wide Iron Butterfly, in which you're selling a $5 wide credit spread and a $5 wide put spread. If you net out that $3, you're left with $2, and that's how you get to the $200 max risk. You can see, though, while there's a max profitability of 300, it's not the most likely of outcomes. You have to perfectly pin that 60 mark, and then somehow both those options would have to expire worthless. Usually a strategy not necessarily with the intent of ever getting that max amount, but rather you're trying to potentially get some of that. This is oftentimes a strategy that is taken off, if possible, prior to expiration, as it's very likely at least one of the options would be in the money leading into that expiration, which, as you talk about every single time we look at these illustrations, gives you a chance to potentially get some assignment or exercise risk that you don't necessarily want. And so risk-defined strategy as it's intact prior to any, expiration, but is it really a earnings-like trade? This is looking for a small move around earnings, and if that small move happened to move it to 60, that would be the best case scenario.
I think really well put, and obviously important to keep in mind for both of our example trades today. They do contain multiple legs that can lead to higher transaction fees. Short options can be assigned at any time, and carrying option positions into expiration can add risk, like unanticipated exercise or assignment. Now, coming up next, it's time to look at all things FOMO. So we are talking Wayfair, which is making a nice 5% move higher today, continuing to rip higher, new 52-week highs. We'll discuss why the analysts are feeling so optimistic on this name ahead of its earnings later this week, coming up next.
Tunes as fraud. Yeah, we had another person coming in here pumping tune. Actually, I was cover shorts, please. Cover whatever, yeah. Keep an eye on tune. Couple of pumpers come in. Could be getting exciting. Yeah, wait for the pump and then throw a short on it for sure. Chart doesn't look too bad. Had a reverse split. Sketchy. Maybe you'll get a reverse split squeeze.
out there when it comes to AMC. They are dealing with a legal battle in order to try to resolve the issue with potentially diluting their shares and trying to manage the ape shares, if you will. But if you can continue to get good news like this and this traffic trend persist over the next couple of weeks, or you would like to probably even see it for the next couple of months, that could have a positive impact when it comes to earnings and maybe giving a little bit more of a boost to the upside when it comes to this stock.
So Kevin, I was following CEO Adam Aron, who actually tweeted the fact that don't get too excited about this box office momentum because they still have to raise significant amounts of cash. So I don't also want to discount that they had a banner week and we're seeing box office interests like I've never seen, at least in years. I haven't seen so many people discussing the Barbenheimer installments. But I also think that Adam Aron is, the fact that the CEO is even saying, you know, we're not out of the woods yet, be mindful, is something that's important to know.
Yeah, definitely. Raising cash is always going to be a challenge when you're talking about names like AMC and maybe some other names that are out there that are really trying to transform their business for the new generation of movie going and entertainment experiences. So I think that's always going to be a challenge. That's why there's this battle right now for how to deal with the ape shares and trying to raise capital that way. But you can always look at the debt market in order to try to raise capital. But the downside to that, especially right now, it's a higher rate environment, as well as trying to minimize any type of future risk when it comes to cash.
Did Pee Wee die?
So you're really trying to bet on
he's been dead, hasn't he?
Picking up over the next couple of years in order to meet any debt service when trying to issue debt. So raising capital for AMC is always going to be, well, for the near term, going to be a challenge for them. Let's see how they actually resolve that matter. If it does come in the form of trying to issue new shares and diluting current shareholders may not be happy, but that might be the only other feasible route in the near term for AMC at this point.
So Kevin, I just heard a rumor that you haven't been to the movies in 15 years. Is that correct?
Yes, I wait for everything to come out so I can watch it at my house. I'm not really into going into movie theaters at all, and so yeah, I haven't experienced the Oppenheimer or the Barbie experience at this point, but looking forward to seeing that come on to streaming platforms in the next couple months.
Okay, I can understand the argument for Oppenheimer. I mean, it was fantastic in the theaters, but watching it at home with subtitles would be like my next step. I can see that. Alex Coffey is probably
Happy Monday.
with you, but I've been to the theaters like 3 times.
Successful on Spy so far, even though it's been pretty choppy.
We'll leave it there. Good insight, though. Kevin Green, senior markets correspondent for the network. Now it's time for FOMO, so I'd like to bring back in Alex when we're talking Wayfair, although I do know that you haven't been to the movie theaters in maybe not 15 years, but like it's been a few years, hasn't it?
I did see something not that long ago. I think it was called The Menu, kind of a dark film, but it was interesting. What I will say is, though, Kevin Green's talking about the pro move. The pro move is just wait till you watch it at your home. You can hit pause. You don't miss anything. You have to watch previews. You can make popcorn at home if you like popcorn. There's a lot of things that are just better about it. But let's talk Wayfair. This is a name that we discussed on Fast Market. Andy Swan had some really optimistic things to say about it. Nearly 70% of the customers that like Folio was seeing talk about this on social media in the past 90 days had an optimistic or positive experience. Consumer happiness, really, really important to indicate kind of the likelihood of going back to a service or product. Also, he talked about visits to this website really starting to show signs of life and recover after a really disappointing holiday season and year last year. This is a
I didn't know Wayfair had stores.
Unique, very hyper story in terms of tremendous demand pull forward during the pandemic, where everyone raced to get new furnishings and redo their homes to make them a little bit more comfortable when they're spending more time.
Seems like they should have had a steak and barbecue.
Left for a couple years. It was like this vacuum of, well, I just redid the office, or I just got a new couch. You didn't need this stuff again. You had just bought it. Well, we're starting to see that sort of has started to work its way through. The same way that there is upgrade cycles for things like smartphones and devices, there is for furnishings as well. We know that there's obviously a ton of supply issues for homes, and more people are kind of stuck in their homes. That's been a point that Tom White made, which is you're not leaving your home and you have to live there because you don't want to get a new mortgage or there isn't a home that you want to move to. Well, maybe you freshen it up by getting a new couch or a new home furnishing. So exciting. Obviously, a really strong name, though, once again.
Yeah, I can completely understand that because during the pandemic, it was like you were forced into the four walls of your home, so you definitely wanted to upgrade. And I could see now it's been a few years, maybe you wanted to refresh what you bought during the pandemic, but also it's expensive to purchase new things for your home. But that's the one great thing about Wayfair is they do offer a variety of price points. This name, though, hard to argue with the price activity it's seen this year. And I know it's not quite the banner year they had back in 2021, but it's still up 135% this year. They also do have earnings this Thursday, but we are seeing some continued analyst momentum in this name as Piper Sandler today did upgrade shares to neutral from overweight, raising their price target to 97 from 35, saying that with home furnishings and the overall industry stabilizing, the company is back to taking market share and its sales are improving. Now, they did say supplier feedback on Wayfair following the company's supplier summit back in June has become more positive than in the last 2 or so years. Importantly, they said that suppliers now seem more confident in leaning into Wayfair's supplier services, which are like Castlegate as well as its advertising. This is important for its ongoing margin expansion. They also think Wayfair is on the cusp of driving sustained EBITDA profitability, and they expect the company's Investor Day on August 10th to provide investors with greater long-term confidence
Sound
on
better?
its overall profitability outlook.
I'm coughing it out now. No, that's like all I did this weekend. It was great.
Also announced a new
Cleared me
generative
out
AI
some.
product called Decorify, which offers
Now my cough
shoppers
is
the ability
phlegmy.
to reimagine their space while using some AI capabilities. Basically, the latest example of how they're using visual inspiration like 3D
think it's
spatial
a
computing
COVID cough.
and now AI to
New
create this
COVID
unique
cruising
and
around.
novel and functional customer experience that was
It's weird
really
and it's
saving what we got
lingering.
out of Wayfair.
It's not bad
I
at
do
all.
think that's huge
Just like a
because
cough
it's so
for
difficult
me.
imagining your space and buying new furniture, especially if you're like us and you live in a relatively smaller city type space. So that does sound amazing, but it's just been more interesting to watch this name recover really after it had a banner 2021.
No doubt, and obviously it lost a lot of that run up because last year was a tough year for a lot of names, especially the growth names, as interest rates came up off the mat, and the economic trajectory for a lot of these things really went downwards with so much of that demand pull forward. But as we look at that 1-year chart that we had up, it almost looked like a sine wave where it's kind of got to this
Fly
level
back to
and fallen
VWAP.
down and gotten to this level and fallen down. Well, this is the third attempt, and that's the 1 day, 1 minute. But if we look at the 1 year, 1 day chart where it has that little bit longer time frame, you're going to see that almost sine wave like activity. So if Rick was here, he would point out how important this level truly is from a technical standpoint. If you believe it may break out on this earnings event because positive momentum, because orders aren't maybe as bad as it's projected to be, for whatever reason, as you can see there, a little bit more of that sine wave like activity. If you think that we're going to break through this point finally once and for all and get back to some of those price levels that we had seen in 2022 and in 2021, this may be that moment. And there was a gap on the chart I saw going back to the May earnings announcement in 2022. So let's call it a little bit over a year ago from now, in which this stock gapped down from in the 90s to sort of this range that we're in now. And so if you believe that that could be the next level, if it is to break through the 77, 78 mark, I have a strategy that would benefit from that. We're looking at buying a 2-week long call calendar to the upside centered around the 90 strike. So we're selling this upcoming Friday, or this one that is this week, August 4th, and we're buying the following week, which is August 11th. The $90 call calendar in this, if done for an 85-cent debit, would have $85 in total risk. This is a little bit more speculative, Jenny, as we talked about these before, as you're sort of pinpointing a point in the stock based off your strike selection. You're almost throwing a dart and trying to land on that spot, because the closer we are to projecting the potential place for this to be post earnings, the more likely it is to be profitable. If you look at the risk profile, it's going to look like that kind of spine-like mountaintop peak, in which it's not as angular, I guess, as the ones that we looked at, like the iron butterfly, and it is rigid, but more like parabolic, if you will, towards that 90 strike. And so closer we can get to 90, the better. But this is just one way to look at it. If you have a different outlook or different time frame, as limited by the strikes available and the expirations listed, you can adjust this to better reflect the potential outlook on this strategy oftentimes seen as a strategy that would be used around earnings because you're selling that super inflated near-term earnings to buy a slightly less inflated longer-term earnings announcement or expiration rather around that earnings announcement, and that differential really potentially benefiting the investor if they're right in projecting where the stock ultimately goes. But you're going to need a pretty big move, Jenny. Market maker move is only $10.30, so this is asking for more than that.
And this name, I will say, just even based on today's price activity, it's not completely abnormal to see Wayfair moving even more than what the market has been pricing in. This name is no stranger to volatility, but we will leave it there. Now, coming up next, it's time to look at more earnings previews, as Expedia is one that is on the horizon. Another name making a 1.5% move higher today ahead of this earnings event, and also seeing some lift on overall summer travel. Renita Young will have that story for us coming up.
See if we get a VWAP break here on SPY. Took the short right there. FFIE. Yeah, it looking pretty rippy today. Continued to climb 16%. Estimated number of creditors would be the 25,000 to 50,000 creditors. I don't know. I'm not a bankruptcy attorney.
Stock is near some of the all-time highs relative to Norwegian cruise lines, but nonetheless, if you look at what's been happening from a performance standpoint for Norwegian, the stock is up 85%
shareholders
on a year-to-date basis, and the financial performance as well
I have
as
no idea.
The bookings growth has been pretty tremendous. If you consider
I don't know how
looking
you
at
can add up the
last 4
subreddit.
quarters, around $6.1 billion in sales,
Somewhere around
they're
there,
just,
maybe
about
multiply it, maybe
$250
not.
million off of where they were back in 2019. So I think what we're actually seeing is
I guess shareholders doesn't matter as much as
for this
share count.
business,
How many
positive
shares
free
they hold.
cash flow, as well as the fact that occupancy rates, as they denoted
You're
last
saying that's
quarter,
maybe
they're fully booked, and so there's no vacancy available
shareholders?
for those who are looking to utilize their services. So I think this is a good sign for Norwegian. And looking at the earnings per share, they're expected to come in with an adjusted profit of 27 cents. If you compare that to last quarter, they lost 30 cents, and even last year they lost about $1.14. So this has been a tremendous turnaround for the cruise liners, particularly Norwegian Cruise Line. And their sales are expected to be around $2.18 billion for the quarter. It is typically the quarter in which there's a lot of bookings, especially for those who are liking to cruise during the summer seasons. If you annualize their revenue numbers just for this quarter, they're looking around $8 billion in sales, and an increase in sales again for the quarter about 82% year over year. So I think this is a situation where we could certainly see the stock continue to inch to the upside, considering they're expecting a full year profitability. They're expecting a quarter of profits. Sales are growing. Bookings are very high. And even from a balance sheet standpoint, the company has about $12 billion in debt, considering $9 billion in equity. That's not necessarily all that bad. And last year, the company actually bought back shares, and its cash position is better than it was back in 2019. So I think the financials look rather compelling for Norwegian, as well as perhaps if they guide higher going forward in terms of bookings growth. That actually might be a situation.
Hasn't quite a bit changed
continue to move to the
since
upside.
their first
Even
filing
though
of bankruptcy.
It's been higher 82% from here. It certainly could move higher from here as well.
Building on that then, George, this is something I was sort of thinking about. On one hand, we know that these companies had a tremendous burden placed on them where they had to take on loads of debt and in some cases issue tons of equity just to sort of get through to the other side. And we know that that has an impact on shareholders. It had an impact on the share price. But now that we're sort of on the other side, not necessarily from all the potential balance sheet damage and hurdles, but as an investor, you can almost look at this and say that this took the market's biggest punch, its best punch, and survived it. Does that lead to potentially more optimism now? It's like, hey, they shut down for years and they're still here and back to growth versus 2019. Is that almost something where you could kind of turn lemons into lemonade?
I think so. I mean, you know, some would say looking at the stock action this week or the price action, sorry, this year, you know, it's been up tremendously. But one of the things you got to consider is when you're buying investments in a stock or, you know, in any other investment assets, you're essentially investing in a positive earnings yield. And as long as the earnings yield continues to move higher for Norwegian, as well as maybe the other cruise liners, you could see the stock returns just continue to gain from here. I know it sounds a little bit outlandish considering the stock is still below its 2019 levels, but as things are improving, there's a higher earnings yield on the stock, and therefore there's a higher return on investment. I think the other thing is you know, much like the airlines, you have to consider cruise ships. Norwegian, Royal Caribbean, Carnival, they're the three largest players, you know, out there from a global standpoint. They have scalability, they have pricing power, and at the end of the day, the volumes available, in other words, the available cruises are actually lower than where they were in 2019, but prices are higher. And I think that's really a great business model right now, especially considering the airlines as well as a comparator. You know, fewer opportunities for different flights, or in this case, different cruise ships, bodes well for the industry group. And I think that's why the whole industry group is moving higher.
Shut George, it's been a really interesting space to watch as Royal Caribbean and Carnival
You're
are
whistling
two of the
a Yaz tune?
on the S&P 500 this year. So it's been phenomenal movement in terms of 2023 for cruises. But we will leave it there. Appreciate
Just
the
a movie for the next
George
3
Jones,
months.
Senior Markets Correspondent. And that
How
also
could
does
she
it
hear
for
you
our
whistling over the
and myself
mower?
for Next Gen Investing. Coming up next,
You like
we
hooked
have
up
the
to a
watch
mic and
list with Nicole
give her a
Howard.
headset? I find flaw in your story, psych you up. Mullen broke VWAP. Wah, wah. I like it though. I still do. Like to see it hold kind of this level. This inverse head and shoulders. Somewhere around there. It could reach as low as here, I suppose. Top of where it came down. Broke below VWAP also. Yeah. Yep, to you having a mic and her having headphones.
Stocks have turned into the negative. The S&P, for example, is now lower. Healthcare, consumer staples,
Loud whistle, holy crap.
some of the areas
You
that are
must
showing
use an
weakness,
electric
while
mower too for that
energy, real estate,
acre and a half.
Consumer discretionary are where the pockets of strength were. That being said, here
There's no way she could hear you whistling.
the S&P down 1, the Nasdaq down 11, and the Russell is up 16. Oil and gold right now we're both higher. Gold's up about $10 at 1970 a troy ounce, and oil is gaining again, 81.57 the barrel. Look, it's up over 15% this month. Its biggest gain in over a year. Saudi Arabia has extended those voluntary cuts into September, and we've seen oil driving higher. Gold, 2009 troy ounce. Bitcoin, 29,365. That's down.
She should be happy.
And the dollar, 101.
That I'm hoping that's a riding mower.
VIX, 1380 there. For some of the biggest stories in the markets, I welcome in Kevin Green,
Two-
correspondent here on the
2.5 hours. That's what is that a walk-in mower?
for SoFi.
Yeah, that's a lot of
I think a
lot of
folks
grass
on
to
Wall
mow.
Street were surprised by this report. The stock gets a jump. Tell me your thoughts. What are you watching?
Yeah, we are seeing a lot of hype around this name, not only just because of today's earnings announcement, but we have seen a lot of trading activity over the last several weeks when it comes to SoFi. Now, today it is up over 20% in the session after beating the street's expectations, both on the top and bottom line, as well as raising their full year guidance because they are seeing some pretty good strength in certain areas of their business. First and foremost, they did
Everyone's
see
taking out loans because they don't have any money
origination
left.
volume increase by 51% on a year-over-year basis, but they did also note that student and home loan demand is actually sliding a little bit. But Nicole, remember, we do have the resumption of student loan payments starting in a couple of months here, which could be a tailwind for this company as well, which is also being factored into their forward-looking guidance.
Can you just save me?
Stock's performance here. Let's see if it's going to be able to hold
Thanks,
at
Cats.
these levels. This was a short sell target a couple of weeks ago. We did see a short squeeze occur a couple of weeks ago, and it looks like this momentum from this earnings announcement is also fueling this rally to the
No,
upside.
like I said, I feel fine. It's coming out.
Yeah, it's
What's up,
pretty
Birdless?
amazing to see this move on that one. And then you've been
It's
watching
manufactured
SiriusXM
sickness.
really
Doesn't
closely.
it's
Tell me
weird and
about
doesn't
that
feel
story.
real.
So we actually have
Fake.
Seaport Research actually upgrading their rating on SiriusXM to neutral from a sell, but they did not provide a price target. They do believe that the short squeeze that has occurred has actually pretty much likely run its course, but that also could add to a continued momentum to the upside, which is why they are adjusting their ratings. And so at the end of the day, we just talked about two stocks that have been targeted for by short sellers that are now seeing pops to the upside. We are seeing a little bit of a disconnect between a hedge between SiriusXM and another stock that is out there that could also have led to this rally to the upside here. It's trying to figure out its equilibrium from a pricing standpoint, as a lot of the trading volume has not subsided over the last several sessions.
They have earnings tomorrow.
Right. Thank you for that, Kevin Green. Good to see you. Appreciate it. Let's take a look at the bigger picture. Andrew Rosen's with us, president of Diversified. Thank you for being with us. We have a big week ahead. You have about 1/3 of the S&P 500 companies reporting earnings this week. We'll have a jobs report on Friday. You have markets that hit new highs last week, the Nasdaq and the S&P. And there's some who are still optimistic out there for an even better end of the year. Where do you stand right now?
Thanks for having me, Nicole. I think we're still on the neutral train, if you will. There's a lot of downside, still worries out there. I think we probably have avoided this hard landing. Now the question is any landing or soft landing. But from our standpoint, there's just the price of a lot of these stocks are still trading close to 20x, and it's higher than normal. So we're still taking a cautious positioning. Hopefully, I would probably classify it as cautiously optimistic, but I wouldn't expect the second half to run away like we've seen pleasantly in the first half.
Yeah, understood. Where does the Fed fit into the picture?
Well, they certainly have an ability to derail things. I think at the highest level, maybe one more quarter point raise is priced into the market and possible, if not likely. After that, I think they should be done. If they seem to dictate, and they're not going to tell you they're done, but if they seem to insinuate more coming this year, you certainly could see a pullback. I highly doubt this year you're going to have enough data and information for them to actually retreat a little. So I think likely outcome is we see one more quarter point raise at most. They sit there for the rest of the year. Most of that's priced in the market. If the Fed deviates from there any which way drastically, I think you'll see the market react.
I see. All right. So at this point now, when you look at the different sectors and what's been going on, I mean, obviously, we just talked about how oil has been running up. When you watch commodities, I mean, you have gold back above 2,000. But the sectors, you know, we've seen banking doing well. We've seen technology, obviously, this year, the Magnificent Seven. What do you see going forward?
We like tech. We like infrastructure. We like semiconductor. I think that's a really interesting space. We like communication sector. I mean, they're probably the four we are most bullish on right now. So if you're talking just high-level sectors, I think that's where our main overweights are. I mean, we, as our firm, we believe in diversification quite a bit. So we have exposure to a lot of areas, but we really look at it through sort of risk on or overweight versus underweight. And so those are four of the sectors that we really are overweight. We don't like energy anymore. So we're taking a more bearish tone there. But those would be the four we're really keen in on.
I understand. And at this point now, you have a higher rate environment. Of course, we don't know exactly what the Fed will do in September and November. But you already noted about people and the payments that they have to make, whether it's car loans or mortgages. And look, you're going to have student loans coming back now, too.
Yes. This is going to be, to me, the story of the second half. As you've seen inventory on housing. I've seen it anecdotally with clients. I mean, we're a big modeling and planning firm. It's not just asset management. So we get in those discussions with clients, and most people are sitting pat. They're not making many moves. I just was even talking to a client recently who's going through a divorce, and they're trying to figure out, no one wants to get rid of the house because to buy something comparable is almost impossible, and they have a 2% interest rate. So yeah, the interest rates is a really big sub-story the rest of this year, not just from a big lending, but what it means to the average investor and to your balance sheet and your ability to do things moving forward.
I know we just talked about the Fed, and I was curious about some of the other economic prints. We saw the PCE come in on Friday, really easing inflation. It was the story there. You're watching GDP. What economic prints are sort of on your radar right now?
Yeah, so GDP in general, like you said, PCE is a big one. I mean, we're seeing consumer spending make up about 2/3 of the economy, which is generally what is typical. We are looking at unemployment's a big one, obviously interest rates and earnings. So really, why are we looking at these is kind of the underlying story. And why we're looking at it is to understand how likely are we to get inflation down to the Fed's 2% target, and with the economy cooling at a decent rate. If unemployment stays incredibly low, then what's going to happen? It gives the Fed more fodder to raise rates more aggressively, especially if inflation stays stubbornly high, although we've seen it come down recently. So all these things really are looking at different ways to ascertain and extrapolate what the Fed's going to do and where interest rates / inflation is. So, and that's really where our focus is.
All right. Well, thank you for that, Andrew Rosen. It's good to see you. We appreciate it. Andrew Rosen of Diversified. Thank you. Coming up, we'll be joined by the CEO of Black Cloak, a specialized cybersecurity company with a mission to protect C-suite executives from cyber attacks. Uber's at a new 52-week high. Our panel will wrap up the show. We're going to talk about that. Caleb Silver joins us to take a look at another name at a 52-week high, and that's Palantir. And up next, it's time to talk big tech earnings. We've already heard from Meta, but what about names like Amazon? Much more coming up. We'll get you ready for the reports. Stay with us.
Oh, so pull behind? Tractor with a pull behind sled thing? At least you're not walking around. What a choppy day on the market. Barbecue bounced up to VWAP. Kind of bounced off that support again. See if it holds. Cost is up 5 1/4. Holland did come down. 1260. Support we're looking for. BBBYQ down 58%. Guess I could open up a short on it. I have margin to short that. Groupon's down 5. InfoBird's down 8. All earnings. Forza. Haven't seen Forza in a while. got impatient. I upped my bid on my Teladoc call. I had 2 of them queued up, but I just upped my price and just put 1 in. So I'll do one more maybe if we can get it cheaper. Otherwise, I guess I'll just keep averaging into these to the upside. Yeah, we've been watching top. Uppity top top. Hit that 479 resistance today. Or 474. A lot of liquidity in here to break out of. But the momentum it has. Could still do it this week. But now that it has shown that that is resistance, I'd like to see some kind of retracement from this huge run. Could it? Like you weren't able to?
But I will tell
It
you
wouldn't
that, you know,
let you?
obviously we've seen a nice
There's
rise
no
in
top
Boeing.
popping
I
up
like
above
Boeing
VWAP.
from about a month ago going forward because we saw it was coming down the pike. Again, another stock that did not catch on fire with the rest of the market. And so, you know, it's better to own the bus maker than it is to own the bus driver. And with the 737 MAX coming back and 5,000 backlogs of orders on
Oh,
planes,
I see. Couldn't bring yourself to do it. I know what you mean. It's hard. Hard to jump on a Bronco.
Yeah, and that's the whole thing. I mean, obviously, Boeing is a
Once it's
national
already bucking.
security story. We think about Airbus and some of the other planes that are produced not here at home, but right now 237. And Meta Platforms, what about this one? Came out with the numbers. Everybody's been loving Meta in 2023. It's the year of efficiency, too.
Well, we wouldn't say that their numbers were stellar, but they were positive enough to lift the stock price up. And we saw the stock price drop around 10, 11%. 3 days before earnings. And so the jig was up. Of course, we said, hey, we got to be able to buy some of this. This is a free gift. And of course, after hours, it shot up to over 325. And I think today it's racked down around 316. But I think as long as their earnings keep growing, we're going to retest those pre-COVID highs of around 376 at some point this year. However, if their top line or bottom line numbers disappoint, you know, in 3-4 months down the line here, Nicole, then all bets are off for that target.
Yeah. I mean, is your mantra sort of to buy names that when they pull back or that seem to be beaten down a bit?
Well, of course. I mean, we certainly don't want to chase the epic rise of you know, the Metas and the Teslas and the Nvidias. I mean, those 3 have done the best this year in the entire market. And so if we believe in those companies and we think they're fundamentally solid and they're going to outperform over time, then we want to buy the dips, obviously, on those companies. But what we don't want to do is we don't want to chase them at these all-time highs year to date.
Right, understood. And then as we look ahead, like a name like Amazon, which will be reporting earnings later this week, your thoughts there?
Well, I think the economy has really shocked everybody this year. You know, as the stock market is leading and the economy is supporting it, you know, I think Amazon is going to surprise to the upside here because the economy really is that strong. And, you know, there were so many bears forecasting doom and gloom for the first 6 months of the year. What we're finding out is that that's just the opposite. I mean, we know the markets are rational, but so are economics. And so I think what everybody's forgetting, Nicole, is there's lots of X factors that are supplementing the economy right now. And so when you consider, we talked almost about this the last time we were on, the government is spending 40% more than they were on the overspend pre-COVID on our annual budget, you know, which equates to a pretty decent sized percentage of GDP. And so it's very hard to see the broad economic data be affected when the government technically is stimulating the economy by way of overspending. And so we find ourselves in this conundrum now, you know, especially since the Fed does like inflation to a certain degree because it'll widen the gap between debt to GDP as a ratio. And so the old saying goes, you can't fight City Hall, but you also can't fight the Fed. And that's exactly what's happening here, Nicole.
Right, and that's exactly what's happening. I mean, everybody's waiting to see what happens in September and November. What about a name like Google? That's something you were focusing on.
We still like Google, but I'd be buying the dips. I would not be buying it at these valuations, and until I can see that earnings are going to be materially better. Even though they're going to be a huge player in the AI space, and so you definitely want to buy the dips on a Google for sure.
What do you think about where the market is headed? How important is this earnings season? This week, for example, we have about a third of the S&P 500 reporting. You said it's really important to see what happens. This week could be very telling. Why is that?
Well, it's telling because we have the biggest companies reporting this week. 130 companies are reporting this week, and the original forecast was negative earnings. Earnings were going to bottom out. We've had 7 straight quarters prior to this reporting period of earnings declines, and so we were heading into that earnings recession, right? Well, it looks like that this quarter has done the exact opposite. Earnings are positive. We're not going into an earnings recession. We're not going to go negative, and so rates obviously aren't affecting earnings at this point in time. It doesn't mean it can't happen, but it means today it's not. And so a lot of the forecasters, a lot of the analytics, a lot of the pundits and prognosticators in economics and the markets got it wrong, Nicole.
Yeah. I don't see Apple on the list, but do you have a thought on Apple?
I don't really have a bearing on Apple. Apple is they're going to find a way to eke out a positive number. The iPhone is pretty much maxed out globally. There's still some penetration in the China markets, but there's not too much more that they can do. But once you leave Apple, once you stay with Apple, you never go back. And so they have a very loyal customer following. And as they broaden their platform to generate revenue, Apple is always going to be growing. I don't see Apple contracting unless we go into a /global recession or depression.
With the S&P right now, 4579 is where we are right now. We've been watching 4600. Where do you think we're headed between now and the end of the year? Obviously you don't know for sure, but where could we be headed, and what would be the catalyst for it?
Well, we're 200 points below the December 27 peak of 2021. And so if you're asking for a call on the S&P, my call on the S&P is going to be 4850 on 12/31 of this year. And so I see us going up, above the market peaks of December of 2021 to December 27th. And so that's where I say we're going to land based on present earnings trajectory and what we see the Fed doing going forward.
I didn't hear the number. Where are we going to land?
4850 on the S&P.
4850. Oh, yeah. And I'm hearing more and more about 4,800 plus. So, I guess there are really people who are feeling optimistic, while there's others who think we retest lows. There is this trajectory that could bring us there. Jeffrey Small, nice to speak with you, and thanks for coming on during such a busy week, too. Jeffrey Small, Harbor Financial. Thank you. Coming up next, the AI trade. Look, it's been exciting. It's been a theme of 2023. Now what? We are watching Palantir. So this is an AI name that's on the move. New highs. Let's get some details. Investopedia's Caleb Silver joins us next.
Barbecue came down. Showed support though on that support level, so that's good. Another buying opportunity if it continues to hold there. Trying to dip buy. You hit it pretty much right on. Just 2750. See it there on the other time frames. There, 10 minutes. Weird how Webull does that. But if it breaks through there, that's where I'd be selling. That'd be my stop loss basically on it. Or you could wait to buy for the upside break. But yeah, I'm just sitting on my position at this point. What I have left, I'll be selling if it breaks below here. Pretty much. Comes above here, might be buying more. I don't know. But down 3.5. Borrow fee has been coming down as well, which isn't great. It's down to 137. So it's still at a high fee, but the trajectory is reversed. Yeah. Yeah, Tup doing an offering makes sense. Yeah. Could happen anytime. Puts are extremely pumped in IV though, so be careful there, of course. Maybe consider a spread. $230.
And the biggest industries are using Palantir's technology for that data set analysis, for data crunching, and understanding what's going with their customers. So think about supply chains, think about utilities, think about the travel world, think about automation. Palantir's software is right in the middle of all of this. So earnings are going to be good. They're just not going to be blowout record profits, or they could be record profits for the company, but it's still a very capital intensive business at this point. Profits, big profits will come.
Tupperware has earnings coming out.
Yeah,
True.
I see that you have the biggest customers
Whistle while you work.
Department of Defense as
Glad
well
it could
It's pretty
help
exciting
drive
when you
on
see
your
these big
mowing
companies and their
chores.
usage. Tell me more about the tools and products and things that Palantir offers that really
Homepage on
makes them
BBY.
right
Oh, this
in
is
the
will
right
return
spot. You
soon.
said at the bullseye of AI, as you said.
I mean,
Yeah, so
promising maybe for the
everybody probably knows who follows Palantir.
the acquiring company of Dream on Me or Overstock.
Data, but when you look
That
at the
still
AI
means nothing to
suite, we're talking about
shareholders.
things like AIP, and that's AI partnership, they call it there. AIP Assist, AIP Logic, AIP for agents. They have chatbots, learning language modules, data sets for using AI across
Psych you
all
up.
these across
You're
industries.
screwed, man.
So it's not like, again, like they're just got here. This is kind of what they do. They're just having their moment because they've really been built as a company for artificial intelligence and the revolution that everyone keeps talking about that is really already coming to our doorsteps. Alex Karp has been so bullish on this that folks are really interested in learning about him. You got to read his op-ed in the New York Times talking about AI as sort of the that Oppenheimer moment for the company and for what it's intended to do. The promise is
Yeah, I went long there. I don't know if I said that.
Palantir. This is the first year because everybody's so focused on AI.
Bigger, better,
You're able
beyond
to
is
see it
coming.
through the share price appreciation. The stock went up a lot a couple of years ago, but that
There's a
was
teddy
absolutely
bear.
decimated
Oh my
last year.
gosh.
But now because we're in that AI moment, this is
I haven't
what
seen
Palantir does.
anybody
That's why
hyping that
investors are so
yet.
bullish on this company.
I'm sure someone has.
Looking up on Investopedia.
That's hilarious. Isn't that a teddy bear?
What companies are known for AI, etc. As you
I
just
think
mentioned,
so.
It being such a popular
But even if it is Teddy, this still means nothing for shareholders
topic for 2023.
until it does.
I mean, what are some of the other companies and tech earnings?
We don't have any agreement with Teddy Holdings.
Maybe Ajax, maybe that project. What are some of the companies, big tech companies with AI mentions that maybe are popping up?
Yeah, we're going to hear from Apple this week. You know they're going to mention something that's AI related, whether it's Ajax or something else. Amazon also reporting its earnings this week. We're going to be hearing about, obviously, what's going on with Amazon Web Services, the fastest growing part and the highest gross margin part of its business. They're using AI across that as well. They're also using AI across their supply chain. So every big company is using it. Every little company is also using it if they want more productivity. And that's what you're going to hear out of a lot of these companies. Now, the big chip companies have been very AI focused, like NVIDIA. You've seen the share price appreciation there, of course, but all the other ones are playing in the space as well, because this is where the industry is going. And a lot of these companies want to have solutions, whether you're a chip maker or whether you are an actual software and data company like Palantir. This is what AI is designed for, and this is why these stocks have been benefiting so much. Have they gone too far? Potentially. Who knows? This is the latest hype of all hypes. That said, Palantir, if you're going to get hyped up about AI, this is kind of what Palantir does.
As I'm hearing more and more people still optimistic about the market.
All right, I'm
our
out.
last guest was talking about a target of 48.50.
Doing my best not to
500. And so what do you think people are looking
go
at
red
now?
on such a choppy day.
Anxiety about the market. The VIX is at 13 and change.
Slowly trading away my
what are
gains.
some takeaways about some of the trends that we're seeing for the rest of this year?
Yeah, a lot more comfortable taking risk. We've seen that with our readers who are looking up much more risky assets to invest in, looking at different ways to benefit off the rise in AI. So they're looking up top AI ETFs, looking at top tech ETFs in case there's a continued run in that part of the market. But we're also seeing folks still taking advantage of high yield savings at the same time. So while they're bullish about the market, about the stock market, and their anxiety is low about that, they are actually thinking about protecting their money as well in case we've come too far too fast, in case of a potential downturn towards the end of the year. So you have this push-pull going on, Nicole, with people looking up high-yield savings, best CD rates, but also looking up best ways to capitalize on AI, top ETFs for AI, et cetera. It's a real mix going on, but that's what you expect in this part of a bull market.
Yeah. Caleb Silver, great to see you. Thank you so much. Editor-in-Chief of Investopedia. Caleb Silver, thank you.
I like Investopedia. Lots of great, whoa, lots of great information on there.
Our panel will get us ready for all things Uber coming up. Take a look at winners and losers in the S&P 500.
Inovix? I don't know what that is. I don't know. I'm just gonna think about you mowing now whenever I hear this Yaz. ETOO had a big move today. There's 18%. CTO breaking out there, 20%. If you can need runners at 230. Thank you guys for the support today. Pretty mellow Monday. To have 37 likes on the board. I appreciate it. Hope you had a good weekend. Hope your Happy Money Monday has treated you the same. Jamia, 14% on that thing. What is this?
What the fuck did DJ's?
Thanks for sharing that, Huck. That was great. Great. More thumbs ups. Urgh! Let's get nuts. Early day. What do you mean, kitty daddy? One and a 1.5% on GME. Barbecue news tomorrow? I don't know. We heard barbecue news this morning. We're listening to the court. No. No, kitty. I was just giving my cyclical thumbs up hype speeches. Just to recap, refresher of where we are, how far we've come today. All that we've accomplished. Periodically, I will do such things as this. Dude, Spy's so choppy. Feel the energy. And a quarter, yeah. Kind of broke that neckline the other day, right? Yeah, that last time you mentioned it to me. Kind of here. So probably a little retest on this cup. I was looking at Pac West. There's the same chart as the SPY at Big Engulfing Candle. Like there's a lot of stocks that got that the other day.
Yeah, there's a handful of bullish factors.
Liechtenstein.
Move to the upside. I'm reminded of back in April, I think it was this spring, when we heard from the Saudi energy minister, and they were talking about a warning to the shorts, right? And since then, there's been a few contributing factors to the upside. Crude oil this week, look, as we start off the week up to 81.90, Nicole. And here in the energy quadrant across the board, you can see green arrows and gains, not what the Fed necessarily wants to see. I'm keeping a close eye on the energy, I should say, RBOB gasoline futures, which are breaking out to the upside. And again, we're seeing price at the pump higher as a reflection thereof. The IEA, the EIA expecting demand to outpace supply. I mentioned the warning to the shorts. You've got expectations that that China at some point is going to provide some stimulus. That's benefiting copper. We've had a weaker dollar. Keep in mind recent comments from the IMF. I mean, all of this has added up to quite the move here. This is just the recent move we looked at in the start to the week off the lows from last week. But here you can see the trend we've seen from $70 just below that $69.50 to begin the month of July. We're up 15% this month, Nicole. taking a look at where we are relative to the bigger picture, because it's all still relatively contained, right? Holding below 85, that's the next big hurdle, but we are holding above the 50-day moving average, and just bringing these two conversations together. This is a chart I've talked about for a while with you, right? The crude, when it was down around 65, 70, we were like, what's going on with this divergence? Because the S&Ps were making new highs for the year. Crude wasn't participating. Look what's happened. That divergence seems to be resolving to the upside, with crude breaking out and well, basically taking out the highs from April right now. I think we should keep a close eye on the WTI to see if it participates and goes along with. Oftentimes, it's not uncommon to see the gasoline or RBOB futures lead the way. Also, diesel, heating oil. You know, I mean, all this ties into those
20 minutes to
inflationary
power
pressures
hour.
that the Fed doesn't
Maybe we'll
want
get
to
a
see. So let's keep an eye
break
on
of
this
VWAP
week.
and a
If it
test of the highs
continues
today.
higher, dollar not necessarily contributing too
By
much
end of
today.
day.
Down, or
Setting
I'm
up a
sorry,
big,
up ever so slightly, but
big
crude's been
flat
kind of
cup
moving
here.
out the dollar recently, it seems like.
Right. Yeah. Good for that. And we will keep an eye for sure. Ben Lichtenstein, thank you. And we have you on it. So you'll notice bias too. Thank you. All right, time to switch gears. Want to go to cybersecurity, a very specialized type of cybersecurity, in fact. Joining me right now, Dr. Chris Pearson,
Doctor?
CEO of BlackCloak. Welcome
Doctor?
to the watch list. Thank you for being with us. So BlackCloak in the world of cybersecurity is something a little different, a little special, particularly for the C-suite. Explain.
It is. I mean, when you think about it traditionally, the walls have been built up around the outside of companies. You know, what controls can you put in place at the company, on corporate devices, on corporate servers, corporate email? But cyber criminals have seen through that. They've said, hey, as it's harder to actually hack on the inside of the company, how can we go ahead and target the executive, the C-suite, the board, those key people in their personal lives? And doing that allows you to go ahead and pivot back into the company. And we've seen that happen in a number of different cases back a year ago with the Uber, Twilio breaches, and then with the LastPass breach.
AMC's up 7.5.
Being targeted and their personal life on their personal computer, and that served as the egress into the company and how the company was actually hacked.
Interesting.
I see. So I want to hear more details about that. You know, the executives that you've been working with, and obviously they are key people for a cyber attack, right? Tell us some examples of what's been going on.
Yes, a few different things there. I mean, you have executives whose lives are inextricably intertwined. Their personal life and their work life are just inextricably intertwined together. Multiple instances of, quite honestly, public information being out there on data broker websites.
More
that allow
lawsuits?
for a phone number and email address of that executive or their family. Remember, their families are being targeted as well. Going ahead and targeting them on their text message, on their personal email, on their personal computers, and getting viruses on there, and then going ahead and jumping back into the company is one great approach. Another great approach that we've seen cyber criminals try a lot is just reaching out and being able to directly communicate with that C-suite, with that leadership, because they know that the controls of the company have stopped. They stopped at the front doors of the company and haven't covered them. We've seen everything from extortion to phishing to actually targeting the executive's family members to pay illicit bills, inappropriate bills, and kind of socially engineer them as well. And we've seen the exfiltration of intellectual property from personal accounts. Executives are always on, and so they do share from time to time information from the company back into their personal Gmail account or personal computer. And that could cause a material incident back with the SEC.
Yeah. I mean, you said, including their families too, but you said that executives are 12 times more likely to be targeted. What advice do you give them? What's the best form of ways to protect themselves against these types of attacks, like phishing, like whatever else? You know, there's a whole slew of them.
Well, really, it's extending the controls of the corporation into their personal lives because they're so highly targeted. Normal consumer-grade solutions won't work there. It's really a holistic group of items. First, from a privacy perspective, how do you make them a harder target to hit? And that means removing public information about them. Second, how do you protect their cell phone, tablet, their computer, their personal devices, and they meaning them plus their family members, and have a 24/7 cybersecurity response team back on them? Third, how do you go ahead and make sure
T-Doc.
the home is safe? And the only way
30
you do that is
bucks.
by actively trying to target the home and penetration test the home and break in, so you can make sure there are no ways in. And then fourth, quite honestly, it's that concierge. It's making sure that they have peace of mind that anything they have a
Yeah, it's
question on
Monday, so
will be answered
this ain't
by
get a big
professional
move.
team
Got
they can
Tuesday,
rely on,
Wednesday,
that they can trust, so they
maybe
don't
even
fall
Thursday.
victim to those scams that might happen in their personal lives.
Right, understood. I mean, when you think about all these cybersecurity
This is the first kind of level we're at now to break though, is 30.
and AI, I mean, you mentioned AI as another issue. I mean, you have people getting their voices disguised. I mean, can we ever have enough cybersecurity? What's your final thought here?
And 35.
Look, AI can be used for good, and it also can be used for evil purposes. Cyber criminals want to make sure that their email messages are better written, and so we know, our threat intel teams have seen it. We know that they're writing messages using AI so that they look like better English. We know that people are using voice recordings of individuals and using those to confuse other executives, other individuals, and go ahead and perpetrate more cyber crimes and fraud there. So AI, once again, good uses, but in the wrong hands, it could be used to have more specially targeted attacks or more effective attacks.
Right, and what should we be doing? I mean, everybody is a target. I know a lot of the events occur, malware and such, because of something that we pressed. There's all kinds of things, two-factor authentication and things like that. What's your advice to folks? I mean, what are some of the basics? You better do this.
Yeah, a few key things. First and foremost, make sure you have dual-factor authentication on all your important accounts. Just 4 that I want you to focus on: financial, email, social media, and healthcare. That means making sure at least you get a code texted to you or some other type of authenticator. That will help keep the cyber criminals out if and when your passcodes become breached or out there on the deep web, dark web. That's really one of the biggest things you do. Second, making sure every single device is protected. Cell phone, tablet, computer, protected against viruses and malware. Third, making sure that you are decreasing the amount of digital breadcrumbs that you put out there, whether it's from your phone and privacy settings or computer and privacy settings, or from removing data broker information, or from taking prudent steps on identity theft protection. Those are all things that you can do to harden your privacy, harden your personal life. It's really, at the end of the day, that personal cybersecurity is key.
Yeah. Dr. Chris Pearson, great to see you, CEO of Black Cloak. Thank you for being with us. And great advice. We appreciate it. Important. Still ahead, I want to talk all about Uber ahead of the company's earnings tomorrow, or they're coming up this week. We'll be right back.
SPY's just wedging down. See which way it breaks out, up or down. %20 on Nikola. Top bounce above VWAP. TTOO still going 23%. Dish back up to VWAP 1.5. Mullins up 3.7 back to VWAP. SPY also climbing back to VWAP. Minutes till power hour.
I think as business is recovering, and also the company has now validated its business model through free cash flow generation.
So at this point, these growth numbers, 16%, 60%, 30%.
Nice, Kevin. Well done, man.
Are all pretty attractive, it seems. Will that be enough for the market to be happy enough to keep pushing this higher in the next month or two? But Kevin, take a look at the technical trends that you're watching on this one.
Yeah, no reason to hold through earnings.
It's been a monster.
Got one more day.
I mean, the stock has had a fantastic year, fantastic run since May. We see it had consolidated around the 200-day moving average back in late April, early May. That was under $30 a share. Here we are trading at 49. So the technical trend suggests more of the same. However, one has to wonder if things have gotten a little bit too far. However, when you look at how things have gone since that last earnings call out there on the chart, we not only broke higher, but we retreated, tested support, and moved off of 37 quite nicely. So we're up, somewhere in the neighborhood of about right now 24, 25% off of that ledge as well. There's been a lot of good movement here. The question becomes whether traders want to stick around for profits along the way in the midst of an earnings announcement. I could understand looking to take a little bit of risk.
SPY still climbing.
Just given the move you've seen here, but there's not a lot that the trend suggests a lot of weakness here. So I think the technical support everything you've been hearing about it, and the only reason you might look to take some off is just so you're not playing the risk associated with the actual earnings.
And so thank you for that. So less risk is evident here in these charts. And Scott, as we await to hear from Uber tomorrow, we're hearing more about margin expansion and maybe even inclusion into the S&P 500, which would help it as well. Where do you think it stands in the world against some of the competition like Lyft? Because Uber has multiple revenue streams, obviously.
I think relative to Lyft in the US, Uber is very well positioned, been gaining share. And what's interesting is that it's very difficult as a number two in a scale-based business like ride sharing to keep up because you can't spend enough to get consumers to come to the app. You have to spend to not only get drivers, you have to spend to get consumers to come to the app as well. So one of the leverage points in Uber's business model is less of a requirement to spend to bring drivers onto the app and to bring consumers to the apps. There's less of a price comparison that happens among consumers once there is a champion, dubbed in a specific market. And I think in the US specifically, that's happened. In other international markets, it depends market by market, but Uber's strong in 6 or 7 of the top 10 GDP markets in terms of the ride sharing business, and a similar number in terms of the delivery business as well. Longer term, the opportunity is if you look at the cost of vehicles, it's spiraled out of control really coming out of the pandemic. And consumers only utilize their car 7 to 8% of the time. And so the dream of the Uber business model was car replacement. I think that's still very much in play on a longer term basis, such that the company can exceed our expectations in 2025 for rides per user per month of 6.
Yeah, and there's always that AI sort of factor, self-driving, ride-sharing, and things like that. I mean, in fact, you have Uber to purchase 100 Tesla Model Ys for the Japan market. Do you have a quick thought on that, Scott?
As it relates to AI, I think in terms of better placement of density of drivers, it certainly helps. The marketing campaigns and efficiency in terms of sales and marketing, it helps. And then in terms of the robo-taxis, or however you want to think of the transition to EVs or the transition to self-driving vehicles, Uber is definitely a play on that longer term. There are other companies, of course, Alphabet's Waymo platform and Tesla, but Uber would definitely be a player in that market as well.
And Kevin, final thoughts. I know you're watching all the moving averages, and there are some people who bought this stock, and they are not excited. We're at a 52-week high because they're still down.
Yeah, that's the one drawback. Obviously, it's all about time frame, of course. Yeah, you've got a great year-to-date return, but there are traders out there who might be stuck in a position where they may be still down 15 or 20%, given the highs that we achieved in 2021. But if you're heading into the earnings and you're wondering about opportunity, I'm sure there are traders who might look to capitalize on some of the implied volatility here. Certainly, selling some calls at the upper level, if you're in a multi-lot position, can make sense. In the neighborhood of say 52 and above. The reason I chose that is just based on the collar. The straddle values on the earnings window here suggest somewhere around an 8% move either way. So at the money contracts are combined at around $4 either direction, gives you 45 to the downside, maybe 53 to the upside. If you're looking to reduce risk and you don't want to necessarily sell everything, you could consider that kind of a process in terms of capitalizing on some of this volatility up here.
Yeah. Scott Devitt and Kevin Horner, thank you both very much. Good to see you both. Really appreciate it. That's going to do it for us here on the Watch List. I'm Nicole Petalides. Thanks for being with me every single weekday, 11 a.m. and 2 p.m. Market on Close is next.
Whether you're an experienced investor or just getting started, TD Ameritrade offers a webcast that's right for you. The platform demo webcast series is designed to help you broaden your knowledge of tools and resources available from TD Ameritrade. You'll learn tips and tricks to help navigate TDAmeritrade.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to tdameritrade.com/webcasts and start learning today.
Thinkorswim by TD Ameritrade is more than a trading platform. It's an entire trading experience. With innovation that lets you customize interfaces, charts, and orders to your style of trading. Personalized education to expand your perspective, and a dedicated trade desk of expert-level support that will push you to be even better and just might change how you trade forever. Because once you experience Thinkorswim by TD Ameritrade, there's no going back.
TD Ameritrade Network has arrived on the floor of the New York Stock Exchange new location with access to the biggest newsmakers in Wall Street, bringing you in-depth market coverage and real-time trade ideas. Do not miss our exclusive interviews with CEOs, bell ringers, traders, and stock pickers, keeping you informed as you navigate your investments. Don't miss Trading 360 at 11 a.m. Eastern and the Watch List at 2 p.m. Eastern, live from the New York Stock Exchange, only on the TD Ameritrade Network.
Good afternoon and welcome to Market on Close. I'm Oliver Rennick. It's kind of a sleepy Monday, but it works for bulls. Can't ask too much when markets naturally are gravitating in their direction without any major interruption. You can basically assume equities are going to grind it out each and every day here. That's pretty much been the case, and it doesn't look like anything's going to change until an outside force acts upon it with enough real conviction to change the story. This week, potential outside forces include employment on Friday. Maybe JOLTS. Market's been kind of paying attention to JOLTS the last few months. Here's the thing, though, that's all employment data, and what matters is inflation. And last week we got inflation. You can project inflation from employment, but it is still a derivative analysis. So if we didn't get a big move last week with the Fed and inflation, then it really suggests we have to get a shocker to upset the trend this week. Now, of course, maybe it doesn't come from the economy. Maybe it comes from Apple. Maybe it comes from Amazon. You've got a lot of names in the periphery that we're going to talk about as well for tech. Some chip makers still, some cloud companies, and we've got some consumer reopened trades that are all very interesting in their own right. But either Apple or Amazon's got to have to bomb, or you're going to have to get some really hot data, it seems, to shake this market up. There's signs that either one of those could potentially do it. We got Tesla and Netflix kind of languishing still after earnings, so we're certainly familiar with mega caps dropping the ball. We're also familiar
MNK popping
with
up here a little bit.
blasting it out of the park like Meta
Of
did.
VWAP.
So
SPY checked at
as
VWAP.
the economy goes, we got a recent reminder
see,
last
though.
Thursday that inflation can still garner attention if the
Still
numbers
could make
are
that
hot
move.
enough. We got a big bond sell-off when GDP came above expectations. It was last Thursday, though, and still, that wasn't the inflation data. Bonds firmed up, and the 10-year yield stayed below 4% last week once we got inflation, and we're still below it. So, what is there to say, really? As far as the macro goes, it seems the market's pretty happy with the pace and approach and aggression that the Fed's taking, with the pace at which economic data is beating expectations without reigniting the match of inflation. The trampoline landing I've been describing, the recovery potential, I think still works. How high do we bounce? Does it get scared if we bounce too high? Maybe, but you probably have to get an explosive move in something like crude. WTI below 82 bucks, not exactly an explosive move, but it's kind of getting interesting. So a lot of these things on the margin are kind of getting interesting, but do they warrant a major change of framework from traders and investors? Probably not until crude starts trading meaningfully above the levels that we're at right now, but we are getting close. 83, 84, a lot of green on that chart, a lot of tests of a breakdown that never took place, so crude potentially could be something to watch. But that's basically my list. Apple, Amazon, we know. That's the earnings highlight this week. JOLTS, as it connects to employment, if they're real hot, maybe we'll see the market project out. But at this point, after the data we got last week, it might depend on crude oil, the inflation case, and the possible bear case that could emerge if it moves too fast. So that's what I'll be watching. The dollar's around 101, the 10 years below
SPY's
4.
coming
If
down.
anything changes on that front.
About to get stopped out.
Bitcoin, by the way, stuck during all of this. You know things are calm and quiet, and there's no major macro U-turn.
Just got stopped out.
Because Bitcoin's not
Bugger.
doing anything. Maybe people have lost interest. Maybe AI has usurped the meme, speculative, exciting tech throne, whatever you want to call it. I think there's some pretty real validity to that argument. We also know that regulators are still really paying a sharp focus to the exchanges and Coinbase.
Hearing it pop back up above VWAP.
I'm also going to be watching, though, this week some of the reopen stuff, because I think that could be fun, given the high
Where's
beta
Jenny?
nature of that group. The SPH
Jenny was there.
has been one of the best performers on the year. It's leading.
There you go,
again
new high on
today.
Oxy.
It's important to realize
Nice.
that this stuff that swings in the market.
Man, market
is
does not
basically
want
divided
to
into
pick a
two
direction today.
categories. The most exciting trades lately.
Refusal.
High beta trades. It's tech, especially the AI connected stuff, and then it's travel companies. And so the high beta ETF here has been one of the biggest, most important trends to follow on the year, but then shortly behind comes quality. So just notice the difference between the green line and the teal line. I've also got the value, low vol, and momentum factors, but those aren't doing a great job of distinguishing themselves right now. What's been important to note is what defines high beta, the stuff that swings the most. And so that's why that green line has more volatility. that's more connected to AI, to NVIDIA, to the ups and downs and the uncertainties around some of the high valuation tech. But then quality factor in the teal is right on the heels of the high beta trade, because companies like Apple have been so crucial in providing that safety of quality,
What the heck?
cash flow, dividends, and reliability. And so that's where Apple becomes so important this week. And then if you break down tech even further, you're going to be watching how cloud companies trade as those
I don't know anything about it.
chip makers. Those have obviously been a huge winner.
I mean,
on the
battery tech is definitely
semiconductors. Right behind it is AI. I picked the LRNZ
blowing up.
here. Shout out to the
I don't know.
True Shares. That ETF has done a good job capturing the AI trade.
I don't know if lithium is we're going to keep using lithium in the future
Behind the reopen trade mixed in there. We'll get
for energy storage.
Tomorrow, though. Right now,
We got solid state that's now making moves,
from last week too, because it is
which I think is a lot more efficient, a lot more energy dense.
Gas pump prices still better than
So,
they were back during the
but as far as that
inflation
specific company, I don't know anything about
last
them.
year, Renita, but some interesting commentary from analysts in this sector today.
Absolutely. So let's focus on Chevron, because it reported earnings last week. And while they weren't the best earnings reports, right, this analyst feels like because this has been the underperformer in the energy complex over the past couple of years, that it could be poised to be better in the next coming years. And so that's what Goldman feels. That's why Goldman upgraded this stock to a buy from a neutral, and the price target is at $187 a share. That's around a 14% move to the upside from where it's been trading today. Not bad at all. The analyst has several reasons for the upgrade, though. One of them is it believes that Chevron has leading capital returns at the moment. Says that it's got
Mullen back above VWAP.
in cash flow in 2024 and then in volumes in 2025.
Cost as well at
And the analyst says
5.7.
that those recent project developments that have been happening
GTO
on
ripping
the
there,
Permian Basin project
breaking out.
volumes are higher than
33% now.
But one other thing as well, this analyst expects Chevron to add approximately $1.5 billion to its earnings in 2026. That's a really huge expectation. He's seeing 22% returns per year for Chevron versus about 10% returns that are expected for the competitors in the space. So he's expecting Chevron to come out on top, even on top of Exxon, which also reported last week, which was not the best report either.
Yeah, none of these were real standouts on the earnings, to your point. But you give some time to process it, and it kind of looks like all of a sudden people are warming up to the potential of higher crude prices helping this. And it's also, to the analyst point, the shareholder friendliness, the dividend, that's a huge part of this.
Yes, they did say that they would have a dividend. They would raise, actually, the quarterly dividend. It'll be payable out in September for this year.
Okay. Exxon, I was reading a pretty interesting story, too, because from their last earnings, they talked about, Axios actually reported on this today, which I didn't catch in the earnings last week, talking about how they want to get into the lithium market. So a pretty interesting way to try and get a new business that's connected. Everybody wants a piece of the autos trade.
Exactly.
The fact that Axios wrote this up, an outlet that we don't often go to for financial news, they found it necessary to put that out there. But that all kind of does suggest that like a little bit of dependence on crude oil can be a negative thing. That's where the commodities got to come into play.
Absolutely. And so actually it's smart for Chevron to do this, try to get in on that EV action. As we know, lithium is a part of the batteries that go in EV vehicles or e-vehicles.
That's right.
And so if they're able to cross over in that way, that's a pretty smart way to get in.
All right, so Goldman thinks Chevron's going to go higher. Energy Group overall up on the day. We're going to see how this plays out with some of the travel stuff over the next couple days, because it might be good for some of these energy dividend payers, but ultimately it's going to make flights more expensive. And we know the airlines already got crunched on their margins, so any move up in crude, that's where it kind of starts to become a little bit of an issue for the economy and the consumer.
Us.
Yeah, unless you got the EV, of course.
Exactly,
right. But I've been thinking about this now for a while, because these Uber earnings too coming up, something we talked about this morning could affect it. All right, it's not a problem yet, but it's on our radar. All right, analysts like Chevron probably means something good for crude. Thanks for the heads up, Anita. Appreciate it. All right, joining us, Eric Ditton's President Managing Director at the Wealth Alliance. Eric, so it seems like you really have to dig right now to try and find something that could get in the way of the strength of this rally. Are you on that page, or do you think at any moment it could go awry?
I'm on that. First of all, thanks for having me. It's good to be back,
Thank
Oliver. I am on that page. If you Google me, I'm proud to say that Bloomberg called me a lonely bull back early in the year. I was at an investment conference down in Palm Beach. They asked the room who thinks the market could be up over 10% this year. I was the only guy that raised my hand, and the proctor said, "Why?" I said, "Because I'm the only one in the room that's bullish." and as you've seen, little by little, everyone's capitulating. The big firms who were negative on the market turning positive. Millionaire investors sitting on 34% cash, one of the highest on record. That cash is getting to work. Humongous put-call ratios earlier in the year. Everything is turning. So the bears are capitulating. And I have to tell you, this is kind of that Goldilocks scenario. Things are, inflation's coming down month after month, but we just came in with a 2.4 GDP, right? Second quarter. So the consumer is holding up very well. I think it's a great scenario. Just have to be careful on where you want to invest right now.
When you say that, is there any area that's an obvious no for you at this point? Some people, for example, X out energy just because it doesn't meet their standards of ESG or whatever their motive might be.
Yeah, no, I'm not that guy. I like energy a lot here. I'm wary on big tech. You got to own big tech. You can't be in this market and not own it. But look, the S&P, 8 stocks, 25% of the S&P market cap. That's excessive. These stocks, the biggest stocks have made the biggest moves. That's not
I
sustainable.
thought it was half.
So
those
you
8
really
were
wanna
half.
look at the underloved.
I guess after that
areas of the market.
rebalancing,
I like
maybe
what
it's
the Dow
not.
just did, right? The Dow this month
That's
in
true.
July
The
is
market's
up
maybe
about
moving quite a bit
3%,
different,
right
so
in
that
line with the
rebalancing.
S&P. But the S&P's up 20%
I haven't
for the
noticed
year,
it, but
and the Dow's up 7%. So the Dow's just starting to play catch up. What's the Dow? The Dow is more dividend stocks. It's more value. It's the stuff that hasn't moved in this narrow advance, and that's where I'm looking for value.
Okay. So when the area to be careful about is the tech stuff that's done the best, is that reflecting an implicit view that the biggest risk to the economy is inflation, Eric, that could go against that trade, a more hawkish Fed, or is it just simply, hey, we've run a long ways, we don't need to be worried about like inflationary breakdown akin to last year, more just kind of on the lines of a pullback?
Yeah, I'm not worried about inflation here. Inflation is in check, and I wish the Fed would stop. I wish the Fed would just wait this out. Big tech just simply the economics, the valuations. When you have trillion-dollar stocks that move 50, 100% in a relatively short period of time, that's I get wary. And so, like I said, I'm not saying don't own big tech, but don't own it in an S&P fashion. Don't have 25% of your equity exposure in big tech.
Okay. So don't have the index then, right?
Yeah, you've got, I mean, we always have a portion in passive, but yeah, I at this point, there are times to index, there are times to not index. And I'd much rather own the equally weighted S&P today than the market cap weighted.
Okay. Equal weight means you're going to get a little bit of a bigger slice of some banks in there. You okay with that? Do you feel that our financials are doing all right? We got that loan officer survey today, shows some tightening, but market seems to be fine with it.
Yeah, I think the financials are cheap here. And unless you think we're going to have a big recession, which I do not, I think these bank earnings are going to be okay. And I really think most of the regionals are going to be okay. Look, my picture here is that rates we're just about at the top here. And I don't think the Fed's going to cut this year, but I think going into next year, I think the Fed will probably start cutting. That means I want to go longer duration, so I do need to have growth, right? But I also want to own dividend stocks. We have a dividend manager that just hit 5% in their portfolio in dividend yield. When they hit that number, that's always been a great entry point. And we're doing that right now. That generally their 1-year return out has been north of 12% whenever they hit that 5% dividend targets. I'd rather own, quite frankly, I'd rather own a bunch of companies throwing off 5% dividends that raise their dividend every year than a 5.3% T-bill that a year or two from now could be back to 3%.
I like that. So the idea of bonds eating away at the earnings yield proposition is an overstated risk, because we do hear a good bit about that, right? Tina Trade being dead, all that stuff. You're saying don't buy it. You got enough dividend out there to keep you satisfied.
Yeah, absolutely. And what I'm worried about is I see a lot of big money just coming in to chase those T-bill rates. And they're here today, but they're going to go away. And if you're a long-term investor, your goal is sustainable cash flow, sustainable income. You don't want to peg your lifestyle to Fed policy. And if you go back to the late 70s and early 80s, Oliver, the smart people were not the ones that bought the 6-month T-bill. They took a lower yield and they locked in long duration. And when rates plummeted, they had locked in that income for a long period of time.
All right. Eric, April this year, I found the Lonely Bull quote from Bloomberg. So verified, true. Okay. Still a bull, but specifically dividend paying, quality, cash flow. Don't overcommit to bonds. Be a little wary of the tech stuff. The last point I would say is that at the intersection of all of that, basically, dividend payer, tech, run a long way, but has a lot of cash, is Apple this week. Is that going to be one of those reliable rocks that it's been, that the market trades it like?
I think so. I mean, Apple is one of a kind. I mean, you know, Warren Buffett said it. He said it. There's no other stock I own like Apple. There's no other company out there. The moat is just tremendous. And
ENBX has that big engulfing candle,
more and more
like the SPY did with that volume.
They'll be in AI. They'll be there in a big way. So I think Apple's going to be just fine.
I don't know anything about this company.
But again, you don't just people out there that I run into that just have half their net worth in Apple.
Very speculative company, I'd say.
Don't do that. You know, it's there's a reason to diversify. It makes sense.
Okay. Don't tie
21,000 revenue last quarter.
Or Apple. So
63 million.
Does this mean we're going to see
negative 63 million operating income
next time or no?
That's not good.
I wouldn't hold my breath, Oliver.
Okay.
I don't think so.
All right. A reason to take. Thanks, Eric. Appreciate the thoughts.
3.3 billion market cap.
From the Wealth Alliance. All right,
what are they
get
doing?
Into the auto semiconductor trade that is quickly becoming the domain of OnSemi. Still up, faded a little bit from the morning pop, but we'll talk about it in the context of semiconductors that have been on a big run. This is a name that belongs at the top with NVIDIA, AMD, and the other leaders.
I don't like it. I don't like it one bit.
Thanks for having me, Oliver.
Okay, this company, we actually had the CEO on a few months ago going into the earnings. I got to say, it seems like one of those rare instances where I can say he lived up to basically every promise he made here. Am I wrong?
Well, that's right. I would agree with that. And I think investors going into the report were very cautious on autos. Everybody is waiting for the shoe to drop in the auto space. But what we are seeing is a very different picture. There is a lot of innovation going on in autos, and we think we're near the bottom of the auto cycle. So we've now had several years of 15 million SAR that used to run at 17 for several years previously. So we believe this down cycle is going to be shallow just because it's been limited by capacity during the COVID downturn and as we came out with all the supply chain challenges.
It's also a rare thing for me to downplay the macro impact, but it seems like that onsemi is doing something in its technology to have such leverage in that world, though, that do they need the broader economy to pick up, or can they just be the main supplier to autos going forward? Are they carving out their own pie, piece of the pie?
They are carving out their own piece of the pie, and I would say also that competitors or other players in the space are doing the same. If you look at NVIDIA's auto segment as well, it's doing very well. So we believe there, again, to my prior point, there is a lot of innovation going in autos, and a lot of companies are able to position themselves to play on that next innovation wave. And I think ON is one of those as well.
So at this point, do they need to really stay on the ball if NVIDIA and others are going after? I mean, NVIDIA doesn't really lose markets it goes after. I know that autos are part of it, of course, but it seems like for onsemi, and again, please correct me if I'm wrong, but their concentration depends a little bit more here on autos. I mean, NVIDIA's got everything, right? I mean, if they decide to start pushing their weight around, could that be a problem for ON?
Well, I think a lot of companies do slightly different things, where NVIDIA is trying to for automakers. So companies like Mercedes not going to be spending a lot of the internal efforts developing autonomy, are partnering with companies like NVIDIA for autonomous driving. So it's a slightly different product and a slightly different path. It's not necessarily a head-to-head competitor. And for NVIDIA specifically, the biggest driver in the near term is going to be data center GPUs. The auto segment is very small, but as we look out 4, 5, 10 years out, auto will be a more meaningful part of the story.
Okay. How does that factor into your guys' strategy at Spear Invest and the ETF that you guys run? Do you take tech into those second, third tiers, the subsectors, and how does that kind of compare to just having a broad tech exposure that looks more mega cap geared like the index does?
Well, our sweet spot is really mid to large cap, not mega cap stocks, and we see a lot of opportunity here. Smaller caps have lagged the mega caps going into this upturn, and we believe there is significant room to catch up. So we specialize in B2B technology, so we look for opportunities across the value chain that may be overlooked by investors. And right now, we believe there is a lot of opportunity on the cloud infrastructure side, on the data center side, where spending is just starting to pick up.
Okay. Right now, SPRX, to your point, tell me about what's going to drive that fund going forward. Is it going to be some of these mid-cap tech companies? Is that the big weighting? I know you got Marvell as another one you like.
That's right. So we disclose all of our holdings on our website, and I can speak to the strategy more broadly.
Sure.
We believe semis are going to lead the way out of this tech cycle, and we believe we're in the early innings of recovery. So the first wave of spending is on hardware, and as companies invest in this hardware, they're going to look at selling that hardware as a service to other parties. So this will involve a lot of companies in the value chain, whether you're looking at data warehousing, whether you're looking at cybersecurity. All of those are going to be tangential areas that haven't really rallied as hard as the semis, that we believe will drive the next leg for technology.
All right. You've got some cloud companies with a pretty good representation in the fund, too. Just looking at a few. Cloudflare, Snowflake in the top 5. CrowdStrike, Zscaler's number 1 right there next to NVIDIA, just going by percent weighting as of close on Friday. Rivian's in the mix there, too. So you've got a little EV direct exposure. Where's the Tesla, Ivana?
Well, it's interesting. If you look at NVIDIA, if you look at Rivian compared to Tesla, right? A huge gap in market cap, obviously very different companies. We believe autonomy is still years away. So when you look at Tesla, we believe that significant part of that valuation is driven by FSD. And I think that people may misunderstand what FSD is and where is it going to be going in the next 5 years. Rivian, on the other hand, is trading below the amount that was invested in the company plus the cash on the balance sheet. So you're really not paying a lot to get EV exposure. We like the auto cycle here. We think, as I mentioned before, we are at the bottom. So you want to be positioned in the OEMs, and we think there is good value in Rivian.
Okay. Your guys' Spirit X is beating the heck out of the S&P 500 this year, up 67%, obviously beating the NASDAQ too. NVIDIA playing an important role in there. As you've talked about the mid-cap preference you guys have, is there a point where NVIDIA gets too big?
Well, we manage our exposure very actively, and we actually manage risk on the downside very actively as well. I think it goes back to the fundamentals. Once we see the semi-cycle play out, we would look to reduce or reallocate that exposure to other areas. But we're still, as I mentioned before, in the very early innings of the cycle. So I don't see major changes anytime soon.
Okay. Well, I can see you guys have managed the exposure, because if you hadn't, then
She likes
there'd
Nikola?
be,
Whoa.
a ton of NVIDIA. So the fact Zscaler's even up there next to it obviously means it's not just directly market weighted. So, all right, thanks for taking us through it, Ivana. Appreciate it.
Thank you.
Absolutely. Good look at the connection between
Top breaking up to the upside a little bit, but VWAP starting to get some Chinese names here on Webull again.
For the tech traders who like a little bit of action, Palantir, he spotted something there in the options market today as the stock has caught the attention of lovers and haters alike. Is it a meme? Is it not? Call it a meme stock, and Palantir bulls will come after you. It's up 200% this year.
Mullen. Yeah, above VWAP as well. 1367 was the high on the day. Cost up 5.8. Dish up 1.8. Teladoc's hanging out at the highs still. We're retraced, really. Even hit VWAP.
United right now, your stock kind of stinks as an airline. How about for Norwegian? Because these ones generally all trade like each other.
Yep.
And we've got earnings tomorrow as well.
Right. Earnings tomorrow. Option markets pricing in about a plus or minus 7.5% move into this report. And, you know, the stock's up, what, nearly 80% so far this year. So it's had a great run based on the bookings that a lot of the metrics that the companies are giving out at this time. Bookings remain strong. They remain healthy to the end of the year into 2024. They're expected to report EPS of around 27 cents. They reported a loss last year of about $1.14, you know, when we were just coming out of the pandemic. So expectations pretty high in this one. And some traders taking some positioning, but not short-term for an earnings play. This is a longer dated trade. They went out to the January monthly cycle. So 172 days till expiration. You got plenty of time in this one. And they did a combo trade, or sometimes we refer to this as a risk reversal, where they buy a bullish call, and to help pay for that call, they sell a neutral to bullish put. So they bought the 27.5 call about 5,000 times, sold 5,000 of the 20 strike put. Total credit of 52 cents for this combo trade. So the break even to the downside where you start losing money, 1948 over the next 172 days. That's about 11% below the current share price. So not really expecting maybe fireworks on this earnings report, but setting up for a longer term bullish momentum to remain in this one. I kind of like this setup where if you think that it's going to remain above that $20 level into January expiration, this one sets up nicely because even if it does fall below 20, you're still buying the shares if you still hold them short, those puts, at that 1948 level at this point. So the credit that you collected, 52 cents, is what you make between 27.5 and 20. Anything above that's going to be profitability also. So yeah, combo trade, risk reversal, but bullish long term.
Okay. Bullish long term, and a nice little compliment, a little switcheroo from the JetBlue bearishness. All right, charts definitely reflect it, which is the fact that the cruise lines are actually up near the highs.
Right.
And a little refinancing of debt today as well in the world of the cruises. Exciting stuff.
CCL. Yeah.
On this Monday.
Shortening
well, $1.2 billion, right?
Right. Yeah, they basically just take out a loan with a longer dated debt due 2027, paying off some of their 2025 and 2026.
Yeah, CCL, not Norwegian
CCL.
to be clear, but
yeah, but that's what this market kind of allows. When these stocks have run up so much, it allows them to renegotiate their debt.
All right, let's talk Palantir, okay? Big move here. It's going berserk. People have waited around for this basically forever.
Right.
Okay, I'm thinking about a guy, works here, can't say his name, not a meme trader, okay, but he's been in Palantir for a while. Last time I saw him a week ago, he was pumped because, people have been waiting for this to get back to somewhere near $20. A lot of people have been in this basically since it debuted during COVID, right before right in the middle of the market madness. Shot up to $45. Then we got stuck down at below $10 like all last year. People were saying the company was a joke. Okay, they're not everything that people say.
Yeah,
but
that their
they're coming back.
total addressable market was small because they deal with defense and the government, right?
But that was always kind of weird for me because that's one of the cases to kind of just own the defense, older traditional defense companies because they've always got that reliable buyer there.
And parlay that into other segments of the economy.
Yeah.
Right? And Alex Karp, the CEO, recently came out during their last quarter and said, hey, we're right in the mix of everything AI. Then we get the bomb after the close on Friday. Dan Ives did an interview where he said he believes that Palantir will capitalize on the expansion of new use cases over the next 6 to 12 months for AI. That's why you're seeing this big pop today. He says he called it the Lionel Messi of AI, referencing the
yeah,
pro
that's
soccer
Dan
player.
Ives. He's pretty good at the colorful language. I'll give him that. Colorful jackets and colorful language.
And shoes, yeah. But he's saying that the ability for them to start monetizing AI, they've built an AI fortress in this space, and it's only going to expand
Nag woke up
as
there.
demand. And the CEO,
7.3%.
in that same call post earnings, he said they're knocking down their door for
Ice coming
their
down.
applications and their software to combat maybe some of the cybersecurity aspects of AI and building out their AI platforms for these companies. And I think that's where you're seeing the hype around this one. Partially a short squeeze too. Yeah. There's always some short interest.
Has the Peter Thiel mystery faded whatsoever now that he's kind of a little bit more
Ice
distanced
coming
from it? 'Cause I
down.
think that's also why for every Palantir, bull, not like bull, but I'm saying like traders. They're not meme traders, okay? This is a much more legitimate business, at least it seems like, than some of the stuff people were speculating on the last couple of years. Right. But I do think also there's just kind of certain people have a kind of a negativity with Peter Thiel, and they say, yeah, well, is this company ever going to produce a profit? Yada yada. It's all smoke and mirrors.
Right.
Because it's volatile, right? I mean, the options are kind of crazy.
Yeah, they do. And at post earnings, I mean, this thing moves pretty significantly. They don't have earnings until the 7th of August. So got about a week and a half into that, or just over a week.
Give me that trade.
Yep. August 20 calls. They bought over 17,000 of those today. Average debit of $1.60. So that break even at $21.60 over the next 18 days. That's 10% above the current share price. Call volume about 4 times normal daily average volume that we've seen over the last 5 trading sessions. Nearly 600,000 calls traded in there today, Oliver. So big interest in upside bullish calls here. And it's not just this August trade that kind of stuck out to me. It's the near-term options. It's longer-dated options. Yeah, they're buying a lot of speculative upside calls in this name.
That's what I'm saying. People don't walk calmly into Palantir earnings. It's going to be fireworks. I mean, when you're up as much as you are, even if you're still trading less than half of what you did at the high, which is where we are, $20 compared to the 45. The fact that the stock is up in the year 90%, on the year even more, closer to 200%.
Is over 200% this year.
Yeah, a lot of drama.
Yep.
Okay, all right, cool. This should be a fun one. We got to wait a little bit, though. One more week?
Yep.
All right, 7th.
Yep.
Thanks for the trade, Tom. All right, some call buyers into Palantir had earnings next week. Coming up, Jane's going to tell us about the latest stock debut on the New York Stock Exchange. It's Shark Ninja. All right, this is some Monday news for you here.
outputs on Uber? I don't know. I don't know. Carvana. 3% on Carvani. Bearish on their earnings. Fubo's still climbing up here.
Their products are sold online, offline, also at some pretty major retailers. Shark and Ninja are two best in class, I will say, brands. I didn't actually know that they were one entity, so I do own a Ninja blender. It is top tier, it's relatively affordable, and it's sold on Amazon. That's an e-commerce marketplace you want to be on. All in all, though, this public debut has been relatively quiet. We did see shares halted 3 times to the downside, actually, in volatility after opening here just around $30 a share. So one that will be on our radar here, ticker symbol SN. But we ask for more publicly debuts, and this is what we got today, Oliver. So do not hate on the Monday news cycle.
Hey, anyone that develops a device, go under my couch, clean up the cat hair, get all the other stuff. I know you know what I'm talking about. Then they deserve my full attention and respect, which is the Shark part of it, not the Ninja.
Okay, so I'm more of a fan of the Ninja part of it because that is more like kitchen appliances.
Coming down more.
That handheld, I'm not even sure what it's called, but it's great. That the handheld mixer is great. The blender is great. I have a Roomba, so not a Shark vacuum girl, but I can respect the vacuum game.
All right. Okay. Doesn't Amazon want to own these things so they have a map of our house? I thought that was a thing.
Based on their acquisition of iRobot.
That's right. Thank you. Nice. Good recall, Jenny. I knew you would pick that up. Yeah, right? So, I don't know. This could be actually kind of fun to follow now that we've got this one to kind of replace iRobot.
Exactly. The only thing I think that competes with these names is like a Dyson, because Dyson is in this electronic disruptive technology, and Dyson is truly best in class. This is slightly cheaper products, so it depends on your price point, obviously.
Giddy up. All right, thanks to Jenny Horn. Appreciate it. Shark Ninja. Sweet name. SN's the ticker. Now a publicly traded stock for us to talk about. Chris Robinson's here this afternoon.
Oh, they IPO'd.
His favorite subject. It is a good old Chicago commodities and the Midwest farmer, managing director, TJM Institutional Services. It's got a special place in my heart because I drove to see my family in Indiana this past weekend, and I saw a lot of corn, I saw a lot of beans, all kinds of stuff. Chris, what did I miss?
Well, the wheat is being harvested actually as we talk. Winter wheat.
So I didn't see any wheat.
No, probably not.
Okay.
You'd have to get out to North Dakota, South Dakota.
No thanks.
Exactly. Yeah, exactly. But I don't know. Where do you want to start? You want to talk just complete
wheat's getting slammed.
Crazy volatility.
How come it's down 7%?
Yeah. Well, last week you guys talked about the rally, right? The rally had been fueled by concerns again coming out of Ukraine with what was going on with Black Sea and closing ports, and they bombed the Danube. They were about 200 meters away from Romania. People got very, very scared, thinking that type of activity would stop people from wanting to put grain into ships or to be able to get it out of there, be able to export it. So that concern that you'd have a supply shock, suddenly if that was shut off, that drove us to 8-month highs. Long story short, there's 3 different kinds of wheats in Chicago. There's Kansas City, there's Chicago wheat, and there's also Minneapolis spring wheat. All 3 of those had tremendous rallies. I'm looking at Minneapolis spring wheat and Kansas City wheat. They rallied, $1.50, $2. That took quite a long time, about 6 weeks. And in 4 days, we lost half of it. We had a $1 break here in the last 4 days. It just crazy volatility. The market doing the opposite of what a lot of people thought was going to happen, because over the weekend, obviously, we had the Ukraine getting some ordnance, I guess you would call it, into Russia. People were very concerned and still are concerned that could escalate into something worse. And to have wheat drop $1 when logically you would think, boy, they're really going to stop getting any type of wheat or corn out of Ukraine, out of the Black Sea. A lot of people got hurt who had been banking on a sharply higher rally after this weekend. So this market is not trading logically. It's really not, and that's the one thing I would caution people out there. Just because you think, oh, this would be a beautiful time to get long, this market can really hurt you for being logical.
Well, I will say, it's almost just kind of looking
10 minutes
like
Fugazi.
it's trending. We got 2 higher highs, 2 or maybe 3 if we hold
Yeah,
this.
Shark
3
Ninja, I don't
higher
know.
lows in the bottom right of the chart here.
Is that the ticker?
So kind of to your point about there maybe being like a
Popping it today. It did. It IPO'd
Russia
today.
put in here, that's a little bit different
Like
than,
they're owned by the same
a
company?
year and a half ago, which was like all hell breaking loose, quite literally, unfortunately, and then compounded with other inflationary forces.
Weird.
Wheat trades at almost $1,000. Now it's kind of like there's a put here, so maybe we could stay in this trend, but if you're going to get sharp moves to the upside, you got to be fast if you're long.
Oh, you've got to be, I don't care if you're long or short, you're risking 50 cents. 50 cents on a one lot is $2,500. So this is, it can be very lucrative. It can be very dangerous as well. So it's a great market to use options. It's a great market to use options as stops. I don't care if you're bet long or bet short, because in the middle of the night, it gets very, very thin. And that's when you see a lot of this crazy volatility. However, at the end of the
Triggers
day,
all your
the
stops.
trend is what matters. Problem
Who knows
is,
how
most people
futures?
don't want to sit through dollar moves. A dollar move on a one lot is $5,000, so it gets pretty pricey if you want to start holding losers.
Yeah. All right. Nice look here. It's developing into something. So I like it. Thanks for being on the beat for us. Appreciate it, Chris.
Thank you, sir.
Absolutely. Let's get our Schwab panel in here to take us to the bell. Less than 10 minutes left. Stocks mixed on the day. Not a lot of big movement.
See if SPY can make it back to VWAP.
We've got some big minds coming up next. Kathy Jones with us and Nate Peterson as we set up the week ahead.
Got a little green shoot on Carvani. Nice, look at that popper.
Let's walk through how to analyze a company's financials on Thinkorswim. To get started, go to the Analyze tab and select
Mag making new highs there, 7% on it. Oh, Rivian ripping into close. MNK also testing the highs. SPY reaching for VWAP. 5-minute finger slap. VWAP on SPY. Goes pushing 20%. Is a little above VWAP there. What a choppy day on the market all day. And just in the last 10 minutes, we had basically the entire range of the day was covered. Court hearing this morning for barbecue was nothing. It's down 4.7. Still between the zone. It is building liquidity on that right shoulder though, so yeah, you just see it hold above here. We're looking 17 cents, maybe lower, maybe 13 cents to the upside. I think we could see another test of the high here, 38 cents. And past that, we've got gaps, 44 cents, 56 cents, which I think could still happen even without a catalyst. Should have held the longs on SPY. It closed out just before VWAP. That thing go. Look at that thing go. It's making a full cut now. Whoa. Holy crap. Look at all those orders just flooded the market. Oof. GME up 1.2. I see this coming down to the 20 level. Somewhere around there. Tupperware, another big move today. It's only Monday, so yeah, we could see this thing. We can break through 474. We got 556 next. And then the room until that gap, like 7, 8. Still going. 1 minute to close. MNK making moves today as well. 47%. Looks good. Nice bull flag. Buy's trying to reach. Reaching. Oh, look at that rip into close. Wow. And there's the bell. Quite the movement to close. Top, setting up another bull flag. Intraday there. And my Chipotle play is not going in our favor. Night invoice not playing out. And egg started waking up. And to close also up 8%. That's nice. Probably close out of the rest of these calls. Maybe at a retest. I don't have a whole lot of time now. Only 18 days left. They're almost in the money. $1.50. Break even on them's like 1.8 though, I think. Yeah, 1.8. So break even sucks. Zooms up a little bit. Broke out of that first range. Now we need to see a bigger break this level. With this new COVID going around, that might be the trigger. Even though it's mellow. Might be a trigger for Teladoc, Zoom. Archer might get his wish. Let's see, Dish is up 1.8. So many things got that just a daily engulfing candle with SPY. Good SPY. It almost made it to the high of the day in the last 5 minutes. Crazy. Bunko made a move today, 8%. They have earnings on Thursday. Bullish for that. And then the account, got Dish. Costs, let's see, costs up 3.7 today. So, still looking good. Chart still looks nice. There's an RSI divergence there, but uptrend is still intact. We jump into some Mullen today. Don't know why I love the punishment of Mullen, but here we are. I like it breaking that level and holding that support. So got an inverse head and shoulders on it outside of that resistance line. So 14 cents, next resistance, then 16 cents, and on up. What did IEP do? Yeah, IEP 3% on that. Nice. Getting up to that top of that range, top of that cup. And yeah, earnings after hours, I think more tomorrow, more so the bigger ones tomorrow, the next day. But that's what I got for you guys. Thanks for your support today. Appreciate it. We did 41 likes in the day. Well done. Thank you, Kitty Daddy, for your membership and the support. Yeah, we'll see you guys on Discord. Sub up, like up, comment down. Happy Money sticks around. Also follow us on Twitter at HappyMoneyYT. And we will see you on the socials. Thank you, Christopher. Thanks, Cameron. Thanks, Psych You Up. Don't be getting divorced on my account. Good evening to you. No more lawn stories. 3 months. Nice. You're gonna have a jungle story at that point. Thanks, Jay from the Bay. Thanks, MCC. Thanks, Seaman and Poison. Thanks, Guts. Thanks, Kevin. Hope you guys have a good evening. You are quite the supporter indeed. We'll see you on Discord. Okay.